political ambitions. At the same time, there's a very heavy suggestion in the filing that Musk's retort to that was, okay, give me the voting power. And so that's why it's structured in tranches over 12 years, with each of those annualized milestones giving him an additional percentage of voting power. It's really interesting. It keeps him focused. Same with the succession plan participation from Musk. It's very heavily centered on the final 3 years of the deal.
All right, Ed, thank you very much. That's Ed Ludlow. And tune in to Bloomberg Tech at 11 a.m. Eastern. Former Tesla board member Steve Wesley will be joining the show. Now, also speaking of Bloomberg Tech, chipmaker Broadcom reported a strong outlook. Shares, though, they're moving mostly higher on the news that it will build a semiconductor for OpenAI, taking on the likes of NVIDIA. Bloomberg Tech's other co-host, Caroline Hyde, joins us now around the desk. Caroline, just how big of a threat would this be to NVIDIA? Is this really them taking on the giant?
Well, this is what we've seen with the other key hyperscalers. Look, Google designs its own chips with Broadcom. Meta's been in on the action. You've seen similar moves coming from Alphabet and indeed Amazon. All of the hyperscalers have decided that they need to have custom designed chips that aren't just totally dependent on NVIDIA's supply chain. So yes, they look to Broadcom. Broadcom here really showing that their backlog is huge. They already have been talking about how much more business they're winning from the 3 key clients they already had. And now there's open secret. We all kind of knew OpenAI and Broadcom were working together. But now a $10 billion order, that just shows that the AI scale and the opportunity for Broadcom is going up and to the right, and particularly showing that growth, as NVIDIA has perhaps been worrying investors with its growth plateauing a little bit. So more broadly, you are seeing Broadcom taking a bigger and bigger piece of that pie. But 10 billion is nothing to sniff at. And more broadly, we're seeing already shares up 30% year to date for Broadcom. That's better than any of the other Mag 7 names.
Well, if this chip is going to be powerful enough to rival Blackwell, or even, what's the next gen called after that? There's another. Rubin. That raises, to me, the concern that Huawei or Chinese chip makers also could be on the same path.
It's interesting about how they are ultimately becoming more and more specific for individual clients. And this is where people start to think, okay, it's not just about training ever more impactful large language models. It's about the inference. It's about the use case. So this is why you want more specific chips designed for more specific customers. And maybe that's where people think, okay, is NVIDIA still going to hold that chunk of change in inference as it has done in training? And that's something the overall Jensen Huang has been trying to tell the market that yes, they can, and they are still the #1 compute member of choice. But I think people want choice, and you can't be so dependent on NVIDIA. Broadcom here will be alongside NVIDIA. I think you are seeing more and more of these companies having to deliver. You're right. Overall, people are wondering, how is China managing to evolve? How is Huawei? How is some of the other Capricorn starting to step up and make sure that China can be less dependent on NVIDIA? It's exactly what you're seeing at home in the United States as well. But for most people, this is an and rather than an or to NVIDIA.
I think investors would also welcome a lessening of concentration. Caroline, thank you so much for joining us. That's Caroline Hyde. And of course, tune in to Bloomberg Tech at 11 a.m. Now, a quick check on futures, because we are trading at a record high at this moment after closing at a record high yesterday, but maybe more of the dramas in the front end. Yields on the 2-year yield down to the lowest since 2022. Gold is also at a record this morning.
Yeah, I think a lot of movement based on this number, and certainly traders are increasing their bets that the Fed is going to be able to cut maybe more and more. If you see this unemployment number continue to rise, that's a really worrying issue that even the hawks on the Fed are going to have to throw up their hands and make a move.
At 4.3%, the highest figure since 2021, but 2 cuts actually save that.
Coming up, we're going to ask all these questions of one potential Fed chair, BlackRock CIO Rick Rieder. He is the CIO of Global Fixed Income there. He has had his name floated as one of the likely candidates. We'll ask him about that as well. This is Bloomberg.
Hello, this is Dr. Paul Cottrell, and we are live streaming on YouTube and on my website, the-studio-reykjavik.com. We are not live streaming on Rumble today. There's some issue with the app, so we can't do that. So if you would like to help support the work that I do, please make sure you share the links, ask your social media to follow me. And if you'd like to support through donations, you can donate through Stripe, PayPal, or buy me a coffee. You can be a paid member to my Patreon channel. I do these videos for free to give you my perspective on what is going on in the news, what's going on in the market. I also tell you how to improve your health. So you can also support the work by sharing the links. And you can follow me on YouTube, Brighteon, Bitchute, and Rumble. I have 4 channels on YouTube. You can also follow me on X and on GETTR. And you can listen to my podcast audio version on Podomatic, Apple Podcast, and on my website, the-studio-reykjavik.com underneath broadcast. So thank you for joining. I greatly appreciate it. We're going to cover some news today. The big news has been the jobs data that came out. The unemployment rate did go up to 4.3%. New jobs are diminishing in many different categories. So the jobs market is starting to falter, just starting to falter. With that, the Federal Reserve is probably going to lower rates. So that's going to be very positive for equity market. Once the data came out, I noticed that the futures market for the S&P 500 went up. Also, the price of the 10-year bond went up. The reason why that's happening is that the market is starting to price in a 1/4 point, maybe a 1/2 point, but a 1/4 point cut by the Federal Reserve this month. So the front of the curve is starting to go down, and the yields for the 10-year are starting to go down. So that means bond prices are going up. Equities will probably rally today. The VIX is at 14.87. When the news came out, the dollar started to weaken. All right, so you have dollar weakening, yields starting to go down because the Federal Reserve is going to lower rates, and equities are going up. All right, so this is very positive for the equity market. This is what I've been saying for a long time, what was going to happen, and it's starting. So it behooves you to start paying attention now. The futures market is at 6,538. And I have a price target for the S&P 500 year end at 6,800 to 7,000. And we'll see how that curve structure evolves through the rest of the year, and then we'll determine what we should be doing. But if you've been paying attention to me, you would have been making quite a bit of money. So, okay. Now, what also in the news that's happening is OPEC wants to bring down, OPEC Plus wants to bring down the price by increasing inventories. All right. So oil is now trading at $62 a barrel. It was trading almost at 64 just a few days ago. Natural gas is trading at 3.109. I still hold the target that natural gas is going to creep up to about 3.4, 3.5 in Q4. Now, depending on what is happening geopolitically, economically, what happens with OPEC Plus, with the Brent crude price and inventories will determine what the trading range for oil is. Right now, the trading range is $60 a barrel for the floor, and the ceiling is around 65. All right. With that said, please go to my store, the-studio-reykjavik.com, and get the great supplements that I offer that help to improve your health. You can stack them in a customized way, or you can take all of them, all right, like I do, or take certain types of stacks to target certain organ systems. All right. Most of the products that I offer are dual purpose, especially if you stack them the right way. A great supplement that I have that is really important for your brain function is Good Night Formula. Good Night Formula will help you to get into 5 cycles of REM sleep, 3 to 5 cycles of REM sleep. And what it's going to do is it's going to allow you to detoxify your central nervous system. You'll be well rested when you wake up, and you're going to be able to consolidate memory. So over time, what you're going to notice when you're taking this and you're getting proper sleep is that your body is functioning better, especially your brain. And you'll be able to think more clearly. You'll have less brain fog. Your attention to detail will improve. Your cognition, the speed of thinking will improve, and your memory. In addition, with Goodnight Formula, when you detoxify your central nervous system on a regular basis, your neurons are going to be healthier. Well, if your neurons are healthier and you do that year after year after year, what's going to happen is that when you get into your later years in life, you're going to perform better cognitively. So please go to my store and get the Goodnight Formula. Take it every night. Now, it has tryptophan, melatonin, GABA, and passion flower. So please go to my store, the-studio-reykjavik.com, and get the Goodnight Formula. Use discount 5, you get $5 off any order. If you spend $100 or more, you get a free gift until supplies last. So thank you for joining. Let's listen in to Bloomberg.
The central bank. If you think about what's happening, gosh, there's a little bit of inflation pressure from tariffs, which is goods inflation. Well, goods inflation tends to be a moderate regressive tax in terms of low income. Why would we charge them more for the interest rate? For whether it's home equity line, whether it's for credit cards? Meaning if you bring that rate down, you won't stimulate more inflation necessarily. So we're not going to impact the tariff transmission mechanism. But you would help a lot of people in the country that are struggling today and are getting, a bit of a regressive tax from tariffs in the intermediate term or the short term. But you help them in terms of bringing down their cost of borrowing.
Look, I just can't help but wonder. I mean, we've heard the president argue that the reason rates should come down also is because the economy is doing well and things like the housing market. Are you saying that you agree with the president on that front? And if that's the case, what's the risk that the long end continues to rise and doesn't solve the problem that rate cuts are supposed to address?
So it's a great question. So the first thing I would say, the housing market is stuck. Whether it's building permits, mortgage applications, new home sales, housing starts, we're at levels, and it's like in the 60s, similar to the 60s and 70s when the population is roughly double the size. Housing market is stuck. What does that mean? You create a dynamic in the economy where people, if you want job mobility in the tougher job market, it's harder to move because you can't sell your house, particularly if you have a 3% mortgage. We need to bring down housing costs. We need to bring down affordability of homes. By the way, I've argued this on this show many times. If you lower, if through the funds rate mechanism, the mortgage rate comes down, I'll get to the other part of your question. If you bring the mortgage rate down, you'll actually build more homes in this country. So home builders don't have to subsidize the mortgage. You actually bring down shelter inflation, which has been sticky. Your point is well taken. Listen, as an investor, we like the front of the belly yield curve because you have, like today, because you have a steepening of the curve. Listen, there's a series of tools that the Treasury can implement, series of tools that the Fed can implement to be thoughtful about how do you manage further out the yield curve, as opposed to just we move the funds rate in moderate increments. There's a lot of tools at play to try and contain where the back end interest rates are.
I'm going to say, Rick, that the administration and Scott Bessent specifically have been watching you on this program, or maybe just reading your research, but they seem to want to interview you for the top spot at the Fed. Treasurer Secretary Bessent has said he's going to start those interviews today. Are you going to Washington?
So I'm going to focus on the jobs report and what I do day in and day out to generate return for clients. I'm focused on what I do day in and day out, and I'm not, I'd rather not comment on that.
I'm sure that that's a focus for you, but if your country calls for your service, how do you answer, reader?
How do I answer? So I'm going to focus on that. I'm just not going to answer that. I'm focused on what I'm doing day in and day out. And listen, whoever ends up being chosen, I've seen some very good commentary from some of the candidates that are out there. Whoever's chosen, there's a big discussion about Fed independence, and I'm a devout believer in Fed independence and what it does for currency stability, what it does for how people around the world think about investing in the U.S. I also think there's innovation and creativity and some thoughtful dynamics that I think the Fed can bring to the equation. Whoever that is, and I think there's a bunch of good candidates on that list. You know, I think we're gonna move to it in a direction that we'll see some more innovation, which I think makes some sense.
Rick, I'm just gonna say, Chair Reader has a wonderful ring to it, and I will leave it there. Rick Reader, thank you so much. You're gonna stick around with us, and we're gonna get more of the market action after the opening bell, so don't go anywhere. Still ahead, Labor Secretary Lori Chavez DeRemer joins us live from the White House as Kevin Hassett says that the jobs number will be revised up by almost 70,000 jobs. We'll have more on that too. You're watching Bloomberg Open Interest.
This is what Ivy League universities you can get into with a 3.6 GPA.
90% of students with a 4.0 plus GPA.
Is there really anyone out there who expects OPEC Plus to surprise the market once again with a decision to bring extra production back to market? Because of course, there is still a 1.66 million barrel per day voluntary cut that was introduced a couple of years ago that could be up for discussion.
Right. Well, I mean, I think that's a really good question. Who's expecting this increase? Bloomberg, we had a survey of analysts and market watchers, and the vast majority think that the meeting that will be held on September 7th on Sunday will just be a rubber stamping and there won't be an increase. Now, there is a smaller group of analysts, a minority, who thinks that there could be a modest increase to production from the next month. Now, that's actually kind of interesting because in the past, the analysts haven't always been right? We're talking about the surprise hikes that have been happening since April, but they had signaled that those hikes had been finished after those 2.5 million barrels had been entered into the market. Now, the big question is, do they want to add these 1.66 million barrels starting to do that now? Because the plan was to do that by the end of 2026. So there's a lot of wiggle room. You're already in a really frothy market. So is this about, adding barrels to the market because they think that there is still some tightness, or is this about capturing market share? I think those will be somewhat the topics that will be discussed when they meet on Sunday.
Yeah, and to what extent do you think some of the geopolitical considerations are also going to have to be factored in? We talk about, the ongoing potential discussions between Russia and Ukraine. President Trump has sort of flouted the possibility of extra secondary sanctions on countries that buy Russian oil. He's done that with India, though it hasn't really had a noticeable impact on Russian production. To what extent do you think that could be a determinant of where we go in terms of one, OPEC Plus decision making, and two, the price of oil in the coming months?
I mean, certainly geopolitics is swinging the price of oil quite a bit as over the last few weeks, months, years even. I mean, Trump has, and what he says has a large impact. And what happens between Russia, the war in Ukraine, and the pressure the Trump administration puts on certain buyers, in particular India, does also have an impact on global oil flows and the price of oil, not just internationally, but also in the United States itself, something that Trump cares deeply about. Now, I think there's one thing, when you talk about geopolitics and relations between countries, I think one other thing that perhaps OPEC Plus will have to be looking at closely will be tariff and the impact of tariffs, right? Where is the global economy, the health of the global economy? Because that is something that's a bit easier to measure compared to what's Trump going to decide one day and wake up. When you look at the measures and the tariffs on the table, OPEC Plus will be looking, and their analysts will be looking at economic growth or economic slowdown because of those tariffs. So I think that's one of the major factors that there will be in play here, because when you look at China, for example, Chinese demand hasn't been living up to where analysts thought they would be at this time of year. There's been a slump, or not a slump, but there hasn't been the growth that was to be expected. At the same time, you look domestically in the United States, they're going to be seeing what US policies are going to be doing to that market, because the US is a major consumer of oil. And some early indications are that demand might not really be there either, because we've seen an oversized increase in inventories this week at the main Cushing facility. At the same time, you're also seeing run rates at refineries at the lowest level in a few months. So those together also indicate a bit of a weaker market. And those factors, the geopolitics, but also just domestic politics of America will have an impact on what they decide.
Adobe Acrobat Studio is all new. What can PDF spaces with AI do? Drag in research, drop in thought, AI pull insights from your docs. You did your thing. It's time to share and let your team build from there. Now you can do that. Do that with the all new Acrobat.
All right, let's listen to Rick Santelli about the jobs report.
We are just a few seconds away from that August employment number. Rick Santelli is standing by. He's been watching all of this as we get ready to go to this number. Rick, we're going to send it over to you.
Wow, and the data is actually coming across the wires on time. Good job, BLS. Change in non-farm payrolls for the August jobs report, 22,000. 22,000. Interest rates started dropping long before this data was released. And last month, well, a subtle revision to 79,000. And if you look at the 2-month revision, thank goodness it's not minus 258,000 like it was last month. Comes out to minus 21,000. Everybody, of course, is trying to find out what's going on with the unemployment rate. We'll do that next. The unemployment rate comes in at comes in at 4.3. 4.3. So it moved higher. Now, here's something interesting. What's the comp? We haven't had a rate that high going all the way back to 2021 when it was 4.5. So you can see that the way it dropped really was quite incredible. We went from 4.2 to 4.5 in November-October period of 2021. Now let's go at average hourly earnings up 0.3, very solid, very much as expected. If we look at year over year, 3.7, losing some steam. 3.8 was expected. 3.9 was in the rearview mirror. So 3.7, that would definitely take us back also to mid-2021 to find a comp there. Hours worked. Many people are counting on this to give them some early clues, thinking hours are going to drop a bit before people potentially get fired. There's two ways to look at it. Maybe you give your remaining people more hours before you hire people. I think it could go either way. It comes in at 34.2. That would be the second lowest of the year. We've had several. 34.1 is where we started the year. So 34.2, kind of.
All right, so less hours worked per week for the ones that are employed. Unemployment rate ticked up to 4.3. And new jobs, or let's rephrase this, payrolls only rose 22,000, while the expectation was 75,000. So there's a softening of the market. There's a softening of the job market. So this adds very high probability that the Federal Reserve is going to do a 1/4 point cut this month, assuming that there's nothing that comes in with data that's showing a spike of inflation.
Figures right in there. And finally, let's look at some of the other numbers we like to pay very close attention to. If we look at the labor force participation rate, and this has not been a good thing, it really has been moving down. We're at 62.6 at the beginning of the year. We're now at 62.3. That's 1/10 better than expected, 1/10 better than the rearview mirror, equals where we were in June. To find a higher one, you have to go to May at 62.4. As I said, it's been steadily moving lower. And finally, we go from 4.3, which is known as U3, the unemployment rate, to U6, which is called the underemployment rate. That zoomed up here also to 8.1%. 8.1% would be the high of the year. Matter of fact, once again, where are we going to find a comp? we're going to the fall of 2021. Interest rates, when about 5 minutes in front of the number, we're hovering around 4.13 and a 10. They got down as low as what looks like on the chart 4.09. We're currently hovering at 4.11. Maybe the best bit of information I could toss out there is we closed at 4.23 last week, and the low close of the year is like 3.9999. We'll call it 4%. That's what everyone's going to be watching, not only on an intraday basis, but more importantly on a closing basis. And once again, I don't care how soft the data is, debt and deficits may weigh in on if we can actually close under that very key level. Back to the panel.
Okay.
Why did no one tell New York drivers about this new rule?
The markets are open now. The markets are open, and the S&P 500 is trading at 6,525. And I've said this multiple times, I have a target at the end of the year of about 6,800 to 7,000 for the S&P 500. Okay, let's listen to CNN and how they spin the jobs data.
Breaking moments ago, jobs growth slowed to a crawl last month. I'm going to bring in CNN's Matt Egan, who joins me now. So what are these numbers? What are we seeing in this?
Well, Omar, look, after years of resilience, the U.S. job market looks increasingly fragile, especially after the latest numbers that just came out. So this report just moments ago shows the U.S. economy added 22,000 jobs in August. That is very low. It's also
we're only 23 seconds into this video with CNN. And you compare it to what Rick Santelli said, who actually worked on a trading floor, used to be a trader, all right, and then a financial news journalist, all right. And you didn't see him going so heavy on the pros and how bad the economy is. He stuck to the data. He basically said, this looks good, this looks bad, you know. But you can see that CNN is trying to accentuate. Now think about it. Unemployment rate at 4.3% is actually pretty low historically. Now the job market, I do think, is slowing down, and the Federal Reserve is going to lower rates. But the main point here is to see how that contrast between CNN, which is not a business network, all right, really lays it on thick on how bad the economy is because Trump's in office. The tariffs are destroying the economy. Everything is bad. See, CNN is constantly, everything is bad by Orange Man.
Fraction of the 77,000 jobs that had been expected. The unemployment rate went up to 4.3% from 4.2%. That was expected, but this is notable because this is the highest unemployment rate since October of 2021, and it breaks a stretch where the unemployment rate had kind of stayed in this very low range. Still relatively low, but moving in the wrong direction. The other big news here, though, is what happened as far as revisions. We saw that July was revised a little bit higher. But more important was June. June was revised from a low number of just 14,000 jobs were added to now negative 13,000.
Do move forward with a different approach. Do consider if 2 medicines in 1 pill could be the right choice for you. Do Dovato. See other real stories at Dovato.com.
Negative 13,000 jobs. It's not quite showing up on that bar chart, but June is the first month where the U.S. economy lost jobs since December of 2020 during COVID. So this breaks a nearly 5-year stretch of job growth, of uninterrupted job growth in the U.S. economy. That's the second longest stretch in U.S. history.
But think about it. What was going on back then? There was lots of stimulus pumped in by fiscal. There was fiscal stimulus, COVID bills and and stimulus packages to boost up the economy. And there were easing regimes by the Federal Reserve. There was also within that 5 years a tightening cycle too, because of the inflation that is caused by the early days of COVID. But we are economically now managing and navigating through the wake of COVID. All right. Most people think, oh, maybe just 1 quarter, 2 quarters, maybe even a year. No. When you're talking about major fiscal stimulus and central banking stimulus into the economy, it takes years for the effects to dissipate, positive and negative. So you have this exogenous shock, all right, from government and from the central bank, and it propagates throughout the economy for years. We're still feeling the aftershock of Lehman because the bankers, the central bankers, are trying to do quantitative tightening. How do they do quantitative tightening when they're constantly having problems with the bond yields? This is the reason why they're having problems in the UK and in France. That's exactly the reason why they're having problems. They have too much debt and they can't do quantitative tightening. So we're still feeling the effects. So at the consumer level or at the household level, they think, okay, something's bad, something happens to the economy, there's some sort of stimulus, rates are lowered, the government issues more checks or some sort of stimulus package or whatever it is. And that once the unemployment rate starts to go back down, everything's okay. No. There's years of this effect that propagate into the economy. Some of it's positive, some of it's negative. But it doesn't go away. We are still living through the aftershock economically because of COVID. So for him to just compare just the 5-year trend, why not a 10-year trend? Because the whole COVID incident in 2020 seems to be an outlier in terms of normal economic activity. All right. So why not look at a 10 or 15-year trend? And you'll notice that unemployment rate would be actually a lot higher than 4.3. Same thing with the dollar. The dollar, the last 5 years, has been extremely valued at a high level. Well, it's starting to come back down to normal levels. Interest rates were super low. The yields on bonds were super low. Why? Because of Lehman. And then once they start trying to do their quantitative tightening, the yields are starting to come back up on top of the stimulus and the overspending of government. There's a combination of two things going on here. But the point here is that we're still feeling the effects of a major financial crash. Lehman. The Lehman event, the housing market crash. And that happened in 2007. So these two waves are affecting the actual market. And there were policies through quantitative easing that allowed for interest rates to be at a very low level because they were worried about deflation at that time. And so it put so much money into the system that eventually, as the economy was healing, homes were bought, homes were built, there were low interest rates, businesses continued hiring, and the unemployment rate started to go down. Yields were low. Mortgages were low. The yield curve was relatively low. And when you compare it to 10-year historical averages. So you can't just take the 5 years and just look at the COVID years as like a representative data set. It's like saying the average economic activity was, for a U.S. economy is just sampling out of 2007 and 2008 and extrapolating out that that's the average economic activity in the United States. Well, obviously that's not true. Well, why would you just look at the last 5 years? So looking at data sets at 10, 15-year marks and looking at these unique situations and knowing that the stimulus that takes place from the central bank and the stimulus that takes place from the government leads to a forward wave that's years in the making. It goes out for years, not just during the crisis.
Now it's over. And when we're digging into some of the sectors here, a couple things stand out. We're seeing a number of the goods producing sectors in the US economy lose jobs, right? We're talking about construction lost 6,000 jobs in August. Mining and logging also lost jobs.
Probably supply issues because of the tariffs. And builders, do you think the builders are going to be deciding to build right now while they know that the Federal Reserve is going to lower rates? Once they start lowering rates, especially through 2026, there's going to be a boom in construction. I think that they're waiting. I think they're waiting. Now, ones that are buying the homes for the new construction, they're either waiting for lower rates or they are a little bit trepid with the job market. I think that there is a large section of the population in the United States that there's a little bit of trepidation and they're not really sure which way to go. But this is a tale of two cities here. The S&P 500 is a record high. So you got a lot of wealth creation that has taken place for ones that have equities, that have investments over the years. And the ones that have even more equity, they have most likely became much more wealthy. Trump's era is going to mint a lot of millionaires. A lot of millionaires. But right now there's a trepidation because tariffs, they get affected by the negativity, that's the demonization of the economy and the demonization of what's going on with the policies of Trump. I mean, I was just at an event. I was just at an event at the Harvard Club last night, right? And I was able to see Graydon, I think his name's Graydon Dawson, his last name. But he was the one that was running Vanity Fair. He left Vanity Fair already, but he ran Vanity Fair for many years, all right? And he told a story about what was going on. What was going on behind the scenes of Vanity Fair and what was his management style, the problems he had in terms of certain writers, some funny stories. He's a very funny guy, extremely funny guy, but he was also an anti-Trumper. And many of the people over at the Harvard Club are anti-Trumpers. I'm not an anti-Trumper. I just call it how I see it. But I do think that Trump is going to mint a lot of millionaires, a lot of them, if you just pay attention to what he's saying. I mean, that market that crashed in April, just by redeploying cash into the system, you would have made more than 20% on your money in 8 weeks, 9 weeks, something like that. That's insane. So the point I'm making is that there are a lot of people that are just demonizing, not realizing, well, wait a minute here. Why is the liberals always demonizing Trump Yet if you really pay attention to what he's saying, you can benefit from it. Because he's creating a chaotic event. And many people will benefit from this. And it's not just the wealthy, it's the middle class that can benefit from this.
Manufacturing lost jobs as well. 12,000 jobs for manufacturing, which is, I think, pretty notable because one of the issues in this economy is all the uncertainty over trade policy, right? Tariffs are supposed to be supporting the manufacturing industry, but instead, the manufacturing industry is actually losing jobs for 4 months in a row. This is the unemployment rate going back to 2020. You see that massive spike on the left side of the screen. Of course, that was COVID, came down dramatically, stayed at historically low levels, but now on the right side of your screen, you can see it is starting to tick higher. So I think you got to put all of this into the bigger picture, right? We've got a number of different indicators showing that this job market really is starting to stall out. And you're looking at U.S. markets reacting. The Dow futures were down a little bit before this. They actually came up just a tiny bit from where they were. Not a major reaction, I think, from investors. I think that's because in a lot of ways, this report, it probably seals the deal on an interest rate cut later this month from the Federal Reserve. Wall Street was already thinking it was basically a slam dunk. And I think that this latest weakness, including the fact that the unemployment rate is up to a nearly 4-year high, I think that's probably going to seal the deal on a rate cut.
He's saying not a major reaction to investors. We just broke intraday the resistance level of the S&P 500. 6,500 is the resistance level. If it stays above that by week close today, you're talking about a major rally that's coming. It's the beginnings of a major rally. Now, it's predicated on will the Federal Reserve lower rates. But I've been saying this for months. Once the Federal Reserve starts lowering rates and the big, beautiful bill that was passed, once those go into fruition, those are accelerants for a higher equity market. And I've been saying 6,800, 7,000 as targets for the S&P 500. Very high probability that's going to happen. And if you look at it from a historical level, the dollar is going to normal levels. Normal levels. It was at elevated levels. And interest rates on the yield curve are starting to come down again because of the Federal Reserve's intervention. Tariffs brought in revenue to the government. That means that you don't have to be taxed as much, or we don't have to issue as much debt. So it's actually positive. And so as unemployment starts to creep back up to 5, which is not normal levels, not 4, 4 is not normal. Once it goes at the 5 and it's at normal levels, what we're noticing is that we're starting to the economy is starting to stabilize from the COVID era and that those last waves, those latent waves from Lehman. Lehman, is like an asteroid. It comes in and there's, a tsunami and there's floods, right? But there's also the wave pattern in the ocean starts to oscillate and there's a harmonic dissipation that takes place, right? And we're seeing the last vestiges of that harmonic dissipation from Lehman. But that means that we're going into a normal level of economic activity. I'm very bullish, very, very bullish. This is going to be positive if you position yourself and you stay true and don't be shaken out by fear. You are going to benefit through Trump's administration.
The cut because of low inflation. That's probably not the reason, right? The reason would be because of low hiring.
And of course, this is the first jobs report since, the controversy over the regular reporting of jobs numbers last month. And so even these numbers could get revised in the future, but as you just laid out in June, the numbers could also get revised down.
Right, absolutely, absolutely. Look, revisions are normal. It happens, right? As the BLS gets new survey responses in from the businesses they talk to, they're gonna update their numbers, just like a meteorologist who updates the hurricane forecast when they get new data. Unfortunately, these updates, though, they've been mostly coming into the downside, and again, showing that hiring has really stalled out.
And it's negative in June, it's just the floor of that graph is zero.
Negative,
exactly. You can't see it.
Yeah.
Matt Egan, thanks, appreciate being on the breaking news as always. Kate?
All right, let's work through this in.
Kate?
All right, let's work through this and keep that wall moment up, if you will, guys, especially with the revisions, because that was something that I know that Matt and I were talking about earlier, as we bring in now CNN global economic analyst, Rana Faruhar, who's also the global business columnist and associate editor of the Financial Times. Rana, just Matt laid out the numbers as they come in. Before we dive in, just your overall take. What sticks out to you?
That it's going to lower rates.
Yeah, it doesn't surprise me. I've been thinking for some time that we were due for a weakness, even possibly a recession. A couple of things that are notable, those manufacturing numbers, that really belies the idea that these tariffs are going to somehow bring back jobs. Jobs in manufacturing are increasingly being done by technology. I think also that interest rate cut that Matt was talking about, we are probably going to see that in the fall, and that may keep.
It's too simplistic. If I was on the show, I would say, you know what? Your answer is parochial. You know why? Because it's not about the actual final assembly. It's about the economic clustering that happens with the tier 1, tier 2, tier 3 suppliers in the peripheral industries that blossom around manufacturing. And that's where most of the job growth is. It's not in the final assembly. But she's an economist being interviewed on CNN. Now, most of the new FDI money that's flowing in with these deals with other companies or countries, they're in their building phase right now. So they're not online making stuff, right? They're in the building phase. So we're going to see that near the end of Trump's term. Actually increases in GDP. We'll have a bump up in construction, but it's gonna take some time as they're building these fab plants and these server plants and other supplies, other manufactured goods, right? But as these businesses start to produce, then you're going to have peripheral businesses starting to blossom. You're going to have smaller businesses coming into the market. And that's going to generate a lot of economic activity. And it's not going to be right away. So if you have $2 trillion worth of FDI coming in, right? I mean, Saudi Arabia was $1 trillion alone, right? It's going to take some time for that to happen. I mean, they had those huge orders for Boeing. Well, it's going to take some time for Boeing to actually build those planes. But as it starts to as they start to produce, then you're going to start to see this economic activity. So it's not going to be all at once. That's with the new FDI money. Now, the tariffs, it's going to happen in phases. When you have higher tariffs, there's going to be increase in revenues going into the country. But what you'll also have is that some suppliers in the United States that have comparable goods will be able to sell to customers because the price differential has gone down because of the tariff. You also have some situations where the price to make things, because raw materials are coming in from other countries, may be at a higher price. And so in some cases, they may decide to lower production and to kind of wait it out until they know what the actual tariff policy is because the tariff policy, even though they have been going up, has been capricious. So what are we going, so if you're a business owner and you don't know what your raw materials are going to be, you may want to wait it out for 8 months and just slow the production. Maybe buy material and put it into inventory and front load it before the tariffs kicking in, and then just kind of wait it out. And I think in a lot of situations that might be happening. But it doesn't necessarily mean that you're going to have economic growth in all sectors right away. Tariffs are probably slowing down economic activity. But that doesn't mean that it will continually slow down and lead to a recession. I think that by lowering rates and people start to build and people start to have mobility because they're refinancing, they're selling their home, they're relocating, whatever it is, that will spur economic growth and more people moving around. Now, the question comes in is what will AI do to the job market in the short term? Will it enhance more employment or will it retard employment? We don't know. We don't know. AI is a big, like, what if in there. But overall, I think that the economy is poised to do really well during the Trump administration. And think about it. It's coming in at a kind of a lower level. Everyone's a little worried about it. It's like, it's right at that, maybe stall speed, right? And then they move into 2026. Once you go into 2026, what's happening? The midterm elections. So Trump's like, if you time this just right, by the time you start voting for midterms in 2026, you may be seeing a major boom in the economy. Now, if the opposite happens and there's not a major boom in the economy, then the Republicans are probably going to lose the legislative branch for control. But if you time this just right, people are really going to benefit in 2026. And I think that with the Federal Reserve starting to lower rates, and they'll do multiple rate cuts, you're actually going to see this happen. And the Democrats are going to lose power, they're going to lose seats, and the Republicans are going to gain seats. Do you want it to be, to the moon and super activity right now, with the potential of it dying off and sputtering with that economic activity at year end of 2026 when you start voting for midterms? Of course not. You want activity at its most, where there's lots of positivity and jobs are being created. And that way the Republicans will be able to go to the voters and say, do you want to continue investing into the Republican Party? So please give me your vote. Or would you like to just switch votes and go to the Democratic Party? And the average citizen is going to vote based on their pocketbook. If they feel that things are positive by year end of 2026, they're going to vote Republican. If they think things are bad, they're going to vote Democrat for sure, no matter what the policies are. So if you time this just right, it's increasing the probability that the Republican Party is going to gain seats.
For a while, but ultimately the market does connect with the economy, and if you continue to see a slowdown, you're probably going to see a market correction at some point too.
Adding this all, you have to kind of add it all.
And even if there was a market correction of even 5 or 10%, if you have money on hand, that would be a perfect time to buy. Again, just like what happened in April, where you could have gained 20% on your money, your new deployed money.
There's a lot, right? You've got the data that you're working through, and then you got layer on.
What you want if you're a money manager, what you want is the Federal Reserve to start to cut rates. You start seeing the equity start to go up. Then you start to see it faltering. As it was going up, you're accumulating new cash, either through trading and the profits from the trading, and new clients coming in. And you're waiting for that correction. You got a bunch of cash from the new clients and some from profitable trading. And you're waiting for that 5% or 10% correction. And boom, you start deploying all that cash, and there's a super accelerant for the next big wave for the stock market. Have you noticed that when there's a wall of worry and it starts to drift up and then it comes back down and there's like a 3 or 4% drop and then it comes back up again? Why do you think that happens? It's because of these institutional investors have all this cash on hand and they're waiting for that drop. So you'll hear a lot of institutional investors wanting to talk down the market. You always got to think the opposite. If you have a bunch of people talking down the market, that means that they want to deploy money, but it's a little too expensive right now. And they want to wait it out until there's the correction and deploy. And when things are selling off, they're telling their investors, don't worry, don't worry, don't worry. Everything's going to be okay. Because they're afraid that they're going to lose money out of their fund. While they're just they're getting ready for deployment of the cash. So don't worry about this. This is the reason why you should do macro investing. Not this micro stuff where it's like you're tied into one stock. So there's too much idiosyncratic risk. But if you look at it from the broad market perspective, that's the way you play it. And I'm telling you, Trump will make many millionaires in the middle class if you just pay attention to what he's doing.
Revisions were the huge story last month, led to Trump blaming and firing the head of BLS for it, accusing her of intentionally cooking the books without evidence. What do you see in the revisions and the uncertainty that is kind of being sown around just the gathering of this data now?
Yeah, a really good question, Kate. The revisions, again, don't surprise me. We often see big revisions. It's about getting more data, parsing it through. It's really about being more accurate. This is almost always the case. So not surprising at all. In terms of the politicization of the Fed, of the BLS, what's going on with Lisa Cook, of anything we've spoken about, in some ways, that's the most awesome thing, because you've got to let the data folks do their job. You've got to have clean data. You've got to let investors, both at home and abroad, know that they can trust the data, that the U.S. is not some kind of, the third world country where central bankers just get fired or BLS data collectors get fired because the president doesn't like it. We know what happens in those countries. They have major financial crises. Turkey's a perfect example. So I am really hoping, frankly, that if we do get a rate cut for good reasons, based on what we've just seen, that maybe that'll take a little bit of the pressure off of Lisa Cook and put Trump back in a box for a while.
But I mean, the president
Maybe Lisa Cook should be taken off of the board because of her mortgage fraud 3 times. 3 times. 3 times. Oh, she did it before she was on the federal board. That doesn't matter. What matters is the ethics. Is she ethical? No, she's not. Well, she's a great economist. Really? She's pushing DEI on the board of governors. She's pushing for it. Not only is she DEI, but she's pushing DEI policies. And then on top of the mortgage fraud?
He's not even sure that he's going to trust the data, or at least, how he's going to play it publicly. Let me just remind everyone what the president said last night ahead of this report.
The real number,
How long before I see results with Tai Chi?
Day 3, you'll feel your energy. Day 7, your eyes will change. Day 28, you will become unrecognizable.
3 reasons to start Tai Chi workout.
The real numbers that I'm talking about are going to be whatever it is, but will be in a year from now when these monstrous, huge, beautiful places, the palaces of genius, and when they start opening up, you're seeing, I think you'll see job numbers that are going to be.
That's the point I'm
incredible.
making. He has brought in so much money and investment that the new economy is being built right now. And it's going to take time before you start seeing the actual economic boom that is going to happen and how the jobs are going to increase. This is what he's doing is major. You play, and do you think if you're buying a home that's brand new, all right, and you're buying into a new community, the best time is to do it at the very beginning, not after they build the community. You get a much better rate. You can get almost 100 to 200% return on your home if you are some of the early buyers into a suburb. And then you wait it out 15 years or 20 years. And you make a lot of money. One, the builders want to close deals. They need the cash flow to be able to continue on the construction of the neighborhood, right? So do you want to be an early investor or do you want to be a late investor? This is the point I'm making here. What Trump is doing is literally creating the S&P 500 to be above 10,000. He's creating that world right now. Now it's going to take some time to get there, and we'll probably have a crash before that. But the thing is it's gonna get there. He's creating millionaires. See, it's like being in the ocean. All right, you got big whales, you got little fish, and you got big fish, and you got sharks, and you got an ecosystem. He's having dinner with a bunch of whales. All right. And these whales, some of them are killer whales, some of them are, I don't know, humpback whales, whatever, all right? But they create debris as they're moving through the ocean, and they're eating their plankton or eating, fish or whatever, right? And you're a smaller fish, and you're swimming around these larger predators, you can get food, a food source, and you start to grow, and you can eat bigger fish, and you start to grow some more, and you eat even bigger fish. So if you swim with the whales, you're going to be a millionaire. Now, will you be a billionaire? Most likely not. But I'm sure you'll do fine as a millionaire. But you have so many liberals out there that are just like trying to demonize Trump. I don't even know why the senators hate him. They're making more money under him than they were under Biden.
He's like, I don't know, let's talk about it in a year. I mean, but you were getting at what's important, which when you get all this data, and then you've got people looking to the Fed, what's going to happen? Why would people want to invest in the United States when the president is saying, I don't know, maybe you trust our economic data, maybe not? I mean, it has been the gold standard.
They wouldn't, Kate, and that's why, in fact, every single time since 2016, when Trump was first elected, every single time the U.S. has done a treasury auction, there's been fewer and fewer foreign buyers. Overseas folks don't want our treasures anymore.
Same problem is happening in the UK. Same problem is happening in France. Same problem is happening in Japan, in Germany. This is not a unique thing. What it is countries have used the bond market too much, and it's raising the interest rates. On top of, you have quantitative tightening from the central banks that when they start selling the assets into the market and starting to extinguish some of the money supply, and you have more supply of these treasuries or more supply of debt obligations, what happens? Interest rates go up. But it's always Trump's fault. It's always Trump's fault. Yeah, right. How's it Trump's fault that the bond yields are going up for Britain? How is it Trump's fault that the bond yields are going up for France? Is it Trump's fault that the economy in China is tanking? And it was tanking under Biden's administration. Is that Trump's fault too? There's an electric storm that's going on in Jupiter, right? Or what about that famous red spot on Jupiter? It's been there for centuries. I don't even know if we even know how long it's ever been there. All right, but it's been there for a long time. Must be Trump's fault.
Why we're going into gold. That's why gold prices are now at a new record and probably going to go higher. Crypto companies are buying treasuries. Don't know if that makes anybody feel good. Doesn't make me feel great. But yeah, these are serious issues.
I was like, I'm trying to look at your face. I was like, so what's you want to say on this one? Good, bad, or bad? What you talking about? It's good to see you, Rana. Thank you very much. Much more to parse through with this.
A lot to talk about here. Joining us now, CNN political commentator Kate Bedingfield. Also with us this morning, Republican strategist Neil Chatterjee as well. Good to see you both. All right, so let's start on the jobs numbers. Neil, I'll start with you. What's your initial reaction to what we're seeing here?
Yeah, look, I mean, it's going to take time. The president was elected to be a change agent, and some of the steps he's taking on the trade front, on energy, on pushing AI and data centers, it will take time for this to be reflected in the economy, in jobs reports. So disappointing numbers for sure, but I think it's just a data point at this juncture. Let's give it some time. Let's let these policies sink in. Let's see the economic impacts of the tax cut legislation that was signed into law last month. Let's give these policies some time to come into play, and I think we'll start to see the economy pick up as a result.
Kate, do you see it as a data point or as a symptom?
Look, I gotta say that as a political matter, the argument, let's give it time, doesn't land well with people. And I say that as somebody who sat in the Biden White House and who watched throughout the 2024 campaign as Democrats tried to make the argument that some of the economic pieces that Biden had put into place would yield benefit over time. And they may well, but as an immediate political matter, that's not a great argument. And as we see, the data shows people are feeling less and less confident about the economy.
Depends on who you are. The poor that don't have equities, that don't have investments, yeah. It's all about day to day. You're surviving day to day. But what about if you have a pension? Or what about if you have a 401k? Or what if you're managing your own retirement? You're going to be doing a lot better under Trump.
Doing things like firing the head of the BLS and bringing less credibility to government data. It just continues to create the.
Wait a minute. They caused a lot of turmoil under the Biden administration in being able to provide data that didn't need to be majorly revised. And when they did the revision, it was always hurting. So the original headline number was always helping the Biden administration. All right. So wait a minute. They need to improve their econometric models and their sampling, especially in the modern age. Well, if you're running the BLS and you're not improving your systems and you know there's a problem, maybe you should get fired. This is too easy of a trope to throw out and say, yeah, Trump is the one that's causing all the instability BLS. Well, what about the revisions that were happening? Wild revisions of job numbers, wild revisions under the Biden administration. And the headline number was always a little bit helping the administration, not hurting. Why is that? Why is that? And why is it that Janet Yellen running the Treasury Department under Biden and Chairman Powell running the Federal Reserve both had this idea that under the Biden administration, inflation is transitory with all that fiscal stimulus that happened during the COVID years. And they didn't want to raise rates, even though unemployment rate was low. That was a political move. That was a political decision. That wasn't just reading the data. That was a political decision that helped the administration. Now the shoe's on the other foot. And what's happening? You have BLS having wild swings of data in the negative for Trump. Headline numbers are in the negative. And you have a Federal Reserve that doesn't want, the Federal Reserve keeps on saying, inflation, we're worried about inflation from tariffs, we're worried about inflation from tariffs. Where the CPI is at, projected at 3.1 for annualized for this year. And the PPI is annualized at, I think it was 3.7. We're worried about it. It's gonna spike. It's gonna spike. And then the PCE data comes in, which is what the Federal Reserve really looks at, and it's coming in at 2.6, where you have targeting of 2, plus or minus something. You have energy going down. Oh, you take out energy, and then it's only at it's at 2.9. See, they spin the numbers to always be negative for Trump, and they don't spin the numbers for it to be negative for Biden. You spin the numbers for it to be positive for Biden. You spin the numbers for a liberal in the positive direction. You spin the numbers negatively if it's a capitalist.
That things are not on the right track economically, and I think this is going to be a political problem for him. And these numbers reinforce what people are feeling in their communities all across the country.
Depends on what you define as on the right track. It depends on what you
insurance bill until you hear this. The truth is, they're legally robbing you every time you pay for car insurance.
No kidding. It depends on what you mean by on the right track economically. What does that mean? What does that mean? In terms of what? Bringing back economic clustering? Using tariffs to give incentive for more FDI investment in the country that just was announced with the Japanese? Is that on the wrong track? Is that what that means? Bringing the dollar down to a normal 10-year average? Is that the wrong track? Is that what they mean? Bringing down rates so there's more private investment in the economy and bringing back economic clustering? Is that the wrong track? Lowering taxes? Is that the wrong track? Thinking positive and being an American, meaning I can instead of I can't? Does that mean that's the wrong track? What the hell is she talking about? We're at 4.3% unemployment. That is not bad at all. What is a problem is that the headwind of AI and how it may affect the youth, the ones that are coming out of college, they are having a problem getting jobs. Now, if you focus on that part, you are really going to supercharge the economy. because they're going to have good jobs, they're going to have family formation, and they're going to start spending, buying homes, building a community. But if you have these young that are coming out of college and they can't get good jobs, then we're on the wrong track for that cohort. I can't stand seeing them, even though I play a lot of it. Please go to my store, the-studio-reykjavik.com, and get this stack. It's really important. By building a foundation and building on that stack, all right, you are slowing down the aging process and improving your cellular processes and improving your tissues and your organ systems. So that foundation, what is it? Taking a very high quality multivitamin. I have the complete multivitamin in my hand here. Get it on my store, the-studio-reykjavik.com. These are the multivitamins that you need for proper enzymatic activity. It digests easily. It's very easy to digest. You take it every day. Make sure you drink it with filtered water. And also take it with the probiotics. I have two types. I have it in the powder version, or you can get it in a veggie cap version. Both are very high quality. I prefer the powder one because I take all these different supplements in powder and it's just easier for me to take it during my lunch. But some people prefer the veggie cap. So please go to my store, get the probiotic. Why do you need a probiotic? It helps your immune system. It helps with digestion. It helps with cellular metabolism. It helps with your ability to absorb nutrients. And it builds better communication between your gut and your liver and your gut and your brain. You'll be able to think clearly. You'll get rid of that brain fog. You'll sleep better. It'll improve your memory. What you'll also notice over time, your cognitive function improves, especially if you apply a holistic approach to this health protocol. Proper diet, proper exercise, staying away from processed foods, drinking filtered water, mindfulness, learning new things. But with a good gut biome, you're actually improving your brain health. And you're also improving your skin, your hair, and your nails. So taking a good probiotic is super important. It starts at the gut. If you have a poor gut health, most likely you have poor health. So it's important to improve your gut health. So go to my store, get the MB40 probiotic or the powdered probiotic that I have. Either one, very high quality. And stack it with the multivitamin. That's the foundation. And by doing that, you can build off of it, customize your health protocol. Now, I will tell you how to do that throughout this broadcast. You can customize it your own way, or you can take my advice and build it the way I do it. But if you do this on a regular basis, you're going to notice that your body is healing. You're improving your immune system. You're improving your endocrine system, and you're improving your other organ systems, cardiovascular, brain function, right? So it's really important. The magic is the stack, is stacking. That's the magic of this. So please go to my store, the-studio-reykjavik.com. Use discount 5, you get $5 off any order. If you spend $100 or more, you get a free gift until supplies last.
Consumer, and I would avoid even real estate very heavily. I think it's a little early for that. That will probably kick in more next year, first quarter next year, if we see the rate cuts that we need.
Carol, how do your clients feel about investing in fixed income these days? Where do they want to go?
Short end. We're still short. Nobody's taking the risk to go out long. They're still under 5 years. The feeling is that's my cash, and I'm holding on to my cash because I'm nervous. They're also looking at gold, by the way. It's interesting. You see a lot of people barbelling with risky assets in Bitcoin or US dollar tether, and then on the other end, holding gold in vaults. I mean, really old school. I see people going back to holding gold in vaults. I haven't had that conversation for 30 years, and here we are again, talking about gold. So there's really just a lot of question marks about how this is going to all shake out. And of course, the minute we hit the new year, we're going to start talking about election 28, midterms and election 28, because some of this maybe unraveled in the end of 26, going into 27. So then people have to calibrate their portfolios. And for that reason, there's still a lot of money on the sidelines, even though you see the market in this narrow tech sector running very strongly.
Got it. So it sounds like there's a lot of, staying put with what's worked and avoiding things where uncertainty is high. And that's kind of been the theme for a couple of months now. What do you expect will be the risk of?
Now, if you just stood put, and you didn't redeploy some new capital into the S&P 500, that new capital, you lost 20%. So this bullshit that she's saying, stay put, lost you money. Just stay put. Just wait it out. Yeah, well, stay put, wait it out, allowed them to collect a fee with the money that you had them managing your money. But if you deployed new capital into that that time period in April, you would have made money. Now let's forget about that. We're at right now the S&P 500 is at 6,473. There's a little bit of a sell-off. I got to look at the news and why that happened. But the thing is that we're still at that 6,500 resistance level. But the point here is that this is the time to buy because it's going up. It's going to go up. Now that doesn't mean that you sell everything and put it all in the market. You got to titrate it in. Dollar cost average. Be smart with it. All right? But just wait and hold. No. Having some cash on hand for a 5 or 10% market correction, yeah, that makes sense. Maybe 10%, maybe 12% of your portfolio should be in a money market or in cash, waiting for that rainy day to happen and boom, hit the market. That makes sense. But just wait and hold. They've been saying wait and hold since April. Wait and hold at 4,800. They said wait and hold at 4,800 and not deploy new capital. And now it's at 6,400 plus. Because Trump must be bad.
So turnover at Northwestern, what's going on there?
Yes, so the president, Michael Schill, said he was resigning yesterday. He's been there for 3 years and it's been a bit tumultuous. In addition to protests and other things, he also had to deal with a settlement from the football coach who had sued the university over hazing. So he had made a deal with protesters during the height of all these protests in an effort to clear the encampment that was viewed as very unpopular.
I hadn't realized that he was under fire or the school was under fire because most of our focus is on Trump's targeting the Ivy Leagues, for instance, Harvard, notably. To what extent does this clear the air with whatever discussions Northwestern is having with the White House?
It probably helps because, they can say, well, our leader has left. We're going to put in a new person, new reforms. But he was also brought before Congress. You remember the very high profile hearing with the presidents of Harvard, Penn, and MIT. And Harvard and Penn's president stepped down.
Was he there at that one?
No, he actually was called separately. And he was grilled along with the presidents of Rutgers and UCLA. And he had talked about, Northwestern has a campus in Qatar, and there said we would be reviewing the contract. It's not clear if whatever happened there. So that he was under a lot of pressure. But don't discount the pressure also about the football team, because they had a settlement that came through late August. The football coach had sued the university for $130 million for wrongful termination, and he denied knowledge of hazing, and he sued. Northwestern is a member of the Big Ten. Don't forget,
important contacts. Yeah,
they may not be, UCLA and winning NCAA titles, but
they matter. Yeah,
sports is, it is still kind of important there.
So where are we in terms of these certain universities dealing with the Trump administration? Is it kind of just come up with a financial settlement and kind of move forward? Is that kind of where we are? Is that the model?
It's all unclear. I mean, we know what happened with Harvard, as we talked about yesterday. They had an incremental win. The court ruled in their favor, but we're just waiting for the administration to appeal as they said they would. It'll probably go up to the Supreme Court. So, you know, even though Harvard won an incremental victory, I mean, the judge did not rule on the funding freeze, so that continues. It still shows a lot of uncertainty. You know, Harvard is still not going to be getting any new grants. So, and that still has a tremendous impact. You know, even though international students are okay there now, it still is a dampening on, if I'm an international student, do I want to come to a school like, even though Harvard is my dream school, if things could be uncertain, you know, it ramps up so much financial uncertainty.
Yeah, it's just easier to go to the UK or to Australia or somewhere else. Which school has settled on something with the White House? It's only Columbia, right?
No, Brown had a
okay.
$50 million settlement, and theirs was pretty smart because it gave $50 million to develop workforce within the state of Rhode Island. So in some ways, it really bolsters their relationship with their neighbors. Penn very early settled about transgender athletes. So, you know, I think
But everyone else is outstanding, and the goalposts keep moving on this.
Correct. And, you know, again, we don't know what's going on behind the scenes. We think Cornell is, we think Northwestern is, Harvard is.
Harvard keeps thinking it's done, but it's not.
Right.
You mentioned the Northwestern football program, and I'm glad you bring that up because yesterday at the New York Power Players Summit, you spoke with the athletic directors of a number of big schools, including Dartmouth, including Ohio State. And obviously the story there is the changing landscape of college sports, how these players, student athletes, can now get paid and how that changes everything. What did you learn from that conversation?
Colleges have to pay a lot of money to players. And as Nina King, the athletic director from Duke, talked about, you know, they're coming up with $20.5 million. At the same time, their own budgets are constrained. But it's a whole new world, you know, to hearing about Ohio State talking about why or what makes sense for them financially to raise money. And UCLA, they talked about they have a huge amount of change too. They're now a member of the Big Ten. As crazy it may sound that they're going back and forth, and they did super well with a number of NCAA championships. But one thing they learned was, you know, one of their soccer teams got delayed on a flight, so they had to come in a day early. So everybody's sort of working out how these conference realignments are working.
And they're still students, by the way.
They're still students. And, you know, that was a big change for them, you know, going cross country. So everybody's working in it. It's a whole new world this year. We're going to see how it goes.
All right, Janet Lauren, our higher education finance reporter here at Bloomberg News. Fantastic to get a catch up with you here on Bloomberg Intelligence. Well, I mentioned the New York Power Players Summit. Yesterday, I sat down with the NHL Commissioner, Gary Bettman, and Ted Leonsis. You know who he is?
I do.
He is the founder, CEO, chairman, basically every title there is, of Monumental Sports and Entertainment. They own the Washington Wizards, they own the Washington Caps, and they also own the Washington Mystics of the WNBA. And we had a broad conversation on everything from streaming to sports betting, but I want to play a part of my conversation where we talked about how today's fans are a lot more sophisticated than they used to be, and they expect a lot more than just the game.
You look for bigger events.
I couldn't give a shit about that. All right, let's go to CNBC. They're interviewing Hassett, the White House advisor, on the jobs number from CNBC.
Hey, stop playing with your fanny pack. You need the Bearskin Tactical Hoodie 4.0 to get comfortable.
Let's turn back to today's jobs number. Payrolls rising 22,000 in August. That's less than expected and a further sign of a hiring slowdown. Joining us this morning with first reaction from the White House, National Economic Council Director Kevin Bassett. Kevin, welcome back. Happy Friday.
Great to be here, guys.
Jim and I were just talking about when the numbers out of BLS will start to reflect the tone of investment that we got at the dinner last night. Is it just too early?
No, well, first of all, I think what you have to do is remember that when you're looking at an economy, you have to look at like the whole portfolio of numbers that we have to look at. This jobs number was certainly a little bit of a disappointment right now, but one of the things, there was a Goldman Sachs study that came out yesterday that showed that because the BLS hasn't really done a good job on its seasonal adjustment in August, that they tend to revise this number up by almost 70,000 jobs, would give you the revised number a month later. As you have to sit back and think, well, what's really going on in the economy depends on lots of indicators, and here are the ones that we're looking at that are giving us the judgment that the economy is sound and inflation is low. First of all, we're having a capital spending boom. Capital investment is up 8% over the first half of the year, which is really, record growth in capital spending. We've got industrial production at the highest level it's ever been. And so we're really cruising into, I think, the kind of capital spending boom we had the last time that we had the big corporate reform. And so against that backdrop, that's exactly what you want to see in terms of, supply side driven growth. So therefore, you're not putting inflationary pressure on as well. And finally, with respect to the great bidder last night, we're already seeing productivity going way up because firms are using artificial intelligence to improve what they do. And right now, it could be, our productivity is kind of hard to guesstimate, but it's looking like it could be going at about a 3% rate this year. If you figure that you're going to get 1.5% growth, potential GDP growth out of labor and capital, that means that you're looking at an underlying trend of almost 4% growth, or even bigger than 4% growth because of this AI. So we're very excited about where things are going. It's a little bit of a disappointing job number, but I pretty much expect it's going to revise up.
All right, Kim and Jim, so that you're on, because I kind of want you to settle a battle I had with some people in game last night. I've got people who tell me, look, that there are, that we're in an economy where everyone, when you come out of college, come out of business school, come out of law school, there are no jobs for you. And then I got others who tell me, hey, listen, it's never been this good and everybody's got a job. Can we just tell me, are people getting hired when they go to graduate school? Are people getting hired if they graduate college? Or is it longer than when you and I went to school?
It's longer. I think it's longer.
Well, the hire rates are about what you would normally see. Members of my family have been hired. Both of them started their new jobs about a week ago. And so you are seeing that people are being hired. Perhaps in some areas it's slower than people thought. So, for example, we know that people who invested heavily in computer programming skills, their jobs are being squeezed a little bit by AI being able to code. But for the most part, we're seeing labor force participation go up and the unemployment rate.
I think this is my take on this. I think individuals that are going into computer science and especially software development, I think they're having problems. Individuals that are in engineering are getting hired. I think individuals that are in healthcare are getting hired, but at a slower pace than prior years. Business majors, accountants, I think there's a slowing down of hiring them. The back office is starting to become more automated. And the need for MBAs is starting to diminish. I'm starting to notice that even at Harvard, all right, people that get economics degrees or finance degrees or computer science degrees, they're kind of like the class of 2025. There's a little bit of a hiccup in terms of them entering the job market. Now, part of the reason is that they want to stay in Boston or they want to stay in New York, right? They have like a set idea that they are going to stay in a certain city instead of going where the jobs are, like maybe Texas or Arizona or wherever, right? So there is this digging in and staying in the East Coast, New England or, New York kind of area, especially New York area. So that's hurting them because that's not where the jobs are. The jobs are, so it depends on the major that they picked and the location that they want to live in. And so if you're in a location that you want to live in that doesn't have really strong job growth, don't be surprised that you're not going to be hired. But ones that are more on the area of engineering I think they are getting gobbled up pretty quickly, pretty fast. Especially mechanical engineering, electrical engineering, robotics. I don't know about chemical, definitely electrical. I think what's happening with electrical engineering, mechanical engineering, they're getting into the job market faster. In terms of some of these other engineering disciplines, like chemical engineering, that may be faltering a little bit. Now, so it really depends on what your major is. Now, if you have a humanities degree, you ain't gonna get a job. Psychology degree, you're not gonna get a job. So it depends on what it is. Depends where you're living and what the degree is in. Now, I'm sure that if he has relatives that are in the job market after coming, I'm sure that he has connections. So it's not a good indicator for his elk to be able to say, oh, the job market's great. Well, of course, if you're well connected, you're going to be able to get a job. I'm reading a book called The Haves and the Have-Yachts. It's actually a funny book, all right? But it also gives a reality of the situation here. People that are well connected and have wealth, those are the individuals that will be able to do well and leverage their network to be able to be plugged in. Ones that don't have that connection, they're not going to do as well. That's just the way human nature is. So it depends on whose economy you're talking about. The economy at the aggregate level, at the middle class level, at the upper middle class level, at the uber wealthy level. Whose economy are you talking about? Because there's many economies. So I think that it really depends on, for these ones that are coming out of college, what's your major and where are you trying to get your job? What field and location? And my observation with the ones that have the typical Harvard degree, undergrad, which is like finance, economics, right? Computer science. There's a lot of them that come out of in this realm, especially in New York. They're having a harder time. They're not hiring. These places are not hiring. The consultants are not hiring. And a lot of these people a lot of these people that are going to Harvard College and they're getting out, right, with their degree, they apply to the consultants. Well, if the consultants aren't hiring as many, then you're going to have a student body that's not employed. When their game plan was to be a consultant, to work at McKinsey or to work at, some other Boston Consulting, whatever. But if these consultants are using AI, then the consulting business, the junior bankers, they're not getting hired because you don't need as many for the analytical work anymore because it's automated. Make a PowerPoint, have the AI do it, use Copilot. You have a template, you just have the AI basically populate it, and then you have a manager oversee the accuracy of it. You still need junior bankers, analysts, but not as many. Same thing with the consultant group. Oh, you have this kind of industry and you got it. Well, you build up a deck. I mean, what's consulting? Consulting is basically a lot of sales to try to get the job. So it's a lot of like pitching. And then once you get the job, then it's based on the industry and then the fine tuning that to the needs of the company. What do they need? They need to restructure their company or go into a new type of business for cash flows, or maybe they're spinning off, whatever it is. But these consultant companies have these different decks in their library of what the industry is and what do they need. And then they fine tune that deck. Well, do you need a junior analyst to do that? No. You can have an AI co-pilot do that. So this is part of the problem. So it depends on the location, what the degree's in, and what the field that the individual is applying into. And many people want to just stay in New York, but perhaps the jobs aren't in New York. Perhaps the jobs are in Texas. Perhaps the jobs are in Arizona or in North or South Carolina. Maybe the job centroid of the country is changing.
Right, so also, just in terms of what people are spending on, we had a company, Lululemon, I don't want to get too granular with you, but you're a person who knows a lot about business. It reported really bad numbers, and I'm starting to think, you know what? The American people have gotten pretty smart. They're not spending $78 on t-shirts anymore. And then I start thinking, are they getting smart or are they getting strapped? I can't tell, but there does seem to be a wisdom among the consumer that just says that
they're getting strapped. I think most people, I think that the lower tier economic individual, either they've been in the job market and they're just making low wages, or people that are just coming out of college and they're trying to establish their career, they are strapped. So they have to be frugal. Now, extrapolate that concept to ones that are in their late 50s, early 60s. So you're in this red zone for retirement. I think there are many people in the red zone of retirement that are also being frugal.
if you're charging a lot, we don't like you anymore. Democrat, Republican, we want reasonable prices. Do you see that?
Yeah, well, I think the one thing we know is that people have more money in their pockets. And so again, in this jobs report, there are very good news, right? That all of the job creation was private sector. Government jobs are down about 100,000 since President Trump took office. And it was all native-born workers that were getting the jobs. And on average, so far this year, the typical worker is making $500 more than he was in January. So that $500 it could be spent, on a $70 T-shirt, or perhaps they're doing better things with their money than that. But they do have more money in their pockets too.
Kevin, there was a nice report yesterday.
Lysol knows little hands deserve big protection. Kill 99.9% of germs.
Kevin, there was a nice report yesterday out of BNP Paribas. The title was Bye Bye Buffer. And the argument was that we're entering a new phase of the tariff story where companies increasingly can no longer rely on their pre-tariff inventory levels. They think that buffer largely depleted by August or September. You think the economy's prepared for that?
I think the economy is definitely prepared for the tariffs. So the way you're seeing it is we're having this capital spending boom. I was meeting with the CEO, I won't say which one yesterday because I don't want to get ahead of his earnings announcement, but he talked about the billions and billions of dollars that they were spending here in the US so that they can get the production to be built here. And that's the other reason why you're looking at the investment number that I said, up 8% over the first half of the year. That's because everybody's rushing to make stuff here. That's going to drive incomes higher here. And I guess the only thing that it might do is make tariff revenue be less than it has been in the last few months because everything's being onshored.
Now, I do want to go back on the executives who were at the White House yesterday. The construction job number is literally pretty much unchanged. But I don't understand this. I've been in data centers. To build these things, it's just monumental, whether it be the cement, the aggregate, all the different racks, all the different people moving things around, the warehouses are connected to it. Who's doing that? Because you need construction people to do it. And we're not seeing that pick up. I'm not, again, not being political. I'm trying to figure out, are we building things better than we used to?
Well, the capital spending that we've seen really skyrocket, right, is for factories and machines and so on. But the housing sector is still a disappointment. It's something we're studying closely at the White House. And the housing sector probably employs as many construction workers as the other side as well. So I would guess that that's what explains the puzzle.
Well, that,
I think construction, housing sector, construction, some of it is higher costs of materials because of the tariffs. And the other is a lot of people are waiting. They need the lower interest rates from the Federal Reserve.
change soon, when we see these mortgage
We're
rates, and
working on
that would be great. 10% of the economy is housing and it's been hurting us, and I hope that comes back.
Yeah, Ken, we were just talking, Jim and me, about whether or not this cycle of rate cuts.
Yeah, but you know, manufacturing was a big part of the economy too. It's not just housing, construction. But you have these, you know, these talking heads on these news networks, like Kramer, that I personally think he was for pushing stuff over to China during the heyday of globalization, and absolutely hemorrhaged jobs. NAFTA just hemorrhaged jobs out of the Northwest. So if he's saying, well, we need to increase housing, well, yeah, I mean, we need more houses for people to have lower cost of living. We need more houses built, that's for sure. But we also need more manufacturing in the country. That's more than 10% of the GDP. But you had these people that were pushing from Wall Street, move the manufacturing to China, import deflation, have them buy the bond market. So the logic in having, you know, more emphasis on construction for homes should be the same logic as having more emphasis on other manufactured goods in the United States.
I mean, we go into one will be different than the one last fall when mortgage rates actually climbed into the rate cutting cycle.
Well, I think that in the end, right, if you think about it, the long-term interest rate is the sequence of shorter-term rates. And so if you think that inflation is going to stay low and so short-term rates could stay low, then you should be bullish about what's going to happen to long-term rates. And we are actually seeing it with the 10-year and the 30-year that people expect that the supply side growth is something that won't be inflationary, that'll take a lot of pressure off of the Fed. And so, yeah, I think that there's a lot of reason for optimism right now. I think after the jobs report today, you've seen federal fund futures move quite a bit so that they're now expecting a third rate cut this year, almost. And so I think that's the kind of thing that moves longer term markets, because if you think the short term rate's going to be low for a long time, well, then that affects the long term rate.
Right. Average.
Your business is crushing it, but unless they've got the right help desk software.
Oh man, I think it's just won't stop.
Your agents can get caught in.
Right. Average hourly earnings year on year 3.7. You know, the Fed chair did talk at Jackson Hole about whether or not a boost in short-term inflation due to tariffs could migrate to wages and what workers are asking for. I guess would this kind of number suggest that workers do have that kind of leverage?
Right. Well, what we're looking at is we like to look at the real wage increase. So the real wage increase right now is about 1.6%. That's about triple the average over the Biden administration. And so once again, we're showing that if we make America friendly for business, then it's good for America's workers. And again, if you've got higher real wages, then sure, whatever happens with inflation, that means you got more money in your pocket than the extra money you have to pay for goods.
Since we'll talk about this Fed independence issue, I think that I've always felt that it's vital to just grew up thinking that. And I do believe that what's happening, some people feel is a chilling effect, obviously. Where do you come out on the idea of being sure that the Fed is in the end independent no matter what? Because I know that countries that have independent Feds tend to have better long-term growth rates than countries that don't.
Yeah, that's absolutely right. There's no question that an independent Fed is really important for long-run growth. That's been shown over and over.
But you also have to compare those countries that are not having an independent Fed. They're typically very socialistic. Now, we don't have a socialistic society, even though the democratic socialists want to try to make it that way. Right? We're a capitalistic society. Well, the thing is that the Federal Reserve has never been 100% independent throughout American history. We've had multiple central banks. With the Federal Reserve has had pressure put on them at different points in time since 1913. Now, those pressure points aren't the same. The magnitude aren't the same. The duration's not the same. The reasons for them are not the same. But to say that they had complete autonomy, it's not true. It never has been. But they're relatively independent. But they can be independent and still politically biased. So the real issue here isn't so much are they independent. Can you purge out the political bias? That's what's more important. Within the Fed.
The literature, and it makes just good.
If you got a bunch of academics, think about it. If you got a bunch of academics, right, or globalists that are on the board, the federal board, do you think they're pro-Trump? No, they're not. They're not pro-Trump. So there's a political bias inherently in the system because of where they're coming from. They're usually left-leaning, central left-leaning, or left. Not ultra-left, but left. Like, for example, Lisa Cook, left. She's left. Many of them are centrist with left-leaning because of their education. They're surrounded by people that are liberal. So to assume that you're an economist and that you're conservative, there's not that many that are conservative. Many of them are left-leaning. They're Keynesians.
What has to happen, you can assert you're going to be independent, you can assert you're going to be nonpartisan, but in the end, the proof is in the pudding. You have to look at the things that the Fed's doing and decide for yourself whether it looks like they're doing that just because of what's happening in the numbers, or are they doing it for some political reason. And so if you look at the facts of like the big rate cut right before the election, which presumably could have helped Harris, if you look at the fact that there really wasn't much squealing from the Fed when all the Biden spending.
This is what I'm talking about. There's an inherent bias within the Federal Reserve Board. This is exactly what I'm talking about. I see this at Harvard all the time. There's an inherent bias to the left. There is this, I don't know, perception that if you're educated, you must be liberal. You must have a liberal mind. You must be progressive. You couldn't be a conservative. Those are rednecks. Those are individuals that know how to spell their name. Those are conservatives. Conservatives don't know how to spell their name. That's how these educated elite act.
Running out of control. They didn't start hiking rates until Jay Powell was renominated. Like those all could be like completely innocent things, but when you see partisan patterns like that, it should make people wonder, is this Fed really being independent? And I think that it's really important for a Fed to kind of keep a scorecard that proves that they are being independent. I can remember I went back and looked and it was almost never the case in the whole history of the Fed that Feds moved interest rates in any direction right around a presidential election. And you can see that, well, that's a Fed that's making sure that there aren't political patterns in their actions. And that's what I think our future Fed keeping doing.
Finally, speaking of the Fed, I imagine the White House has seen this report out of ProPublica, looking at mortgage paperwork and finding that at least 3 of cabinet members call multiple homes their primary residence. Of course, this has implications for the arguments surrounding Fed Governor Cook. Any response?
Oh, that's a matter for those cabinet secretaries who I don't understand their family situations. I've only ever had one home and I don't have a mortgage on it anymore. So yeah, that's all I can say.
Kevin, appreciate the time this morning. Good to talk to you as always.
Please go to my store, the-studio-reykjavik.com, and get the zeolite. Zeolite will bind to heavy metals, toxins, and chemicals and allow you to urinate them out within 6 to 8 hours. Take it every day. Take 3 small drops underneath your tongue, drink filtered water, and detoxify. You can do a heavier detoxification process by taking 10 small drops, drink the filtered water, and do that every day until the bottle's done. Do that once or twice a year. Ashwagandha root helps to control cortisol levels and blood glucose levels. Very important to bring down inflammation. It'll help your cardiovascular system, also help your immune system. Ashwagandha root, by controlling your blood glucose levels, will allow you to help control your A1C levels. Really important. You know why? Because there's a lot of diabetics in the United States. There's a lot of individuals that are pre-diabetic. So the best thing to do is to take ashwagandha and watch your diet. Lignans helps with the immune system and endocrine system, brings down inflammation, soaks up free radicals. It'll also help you to recover after a workout. Super important for your immune system and your cardiovascular system. Magnesium and zinc boosts up that immune system and helps with brain function. There are going to be many people within the next 5 years, because of the crisis that we went through in 2020, many people within the next 5 years, especially if they're age 40 or older, are going to start seeing in their circle of friends or their community, many people getting early onset of dementia. You better start preparing and protecting those neurons. Now, you protect your neurons with proper diet, proper supplementation, taking things that will be neuroprotective, like NAD plus and ubiquinol and magnesium and zinc, right? But also exercise, get good blood flow going to the brain to create that microenvironment, to maintain those dendritic connections, learn new things, detoxify your body. These are all important. But the number of incidences of people getting early onset of dementia are going to rise in the United States within 5 years. And it's not just the geriatric. This is going to be a cohort group that's in their 40s or 50s, on top of the geriatric group. So please go to my store, the-studio-reykjavik.com, and prepare. Go to my store and get the structural nano silver toothpaste. It has no fluoride. Very high quality toothpaste. Get a few tubes for your household. Help support the work that I do and help support your health. It's going to wet your teeth, freshen your breath, help with the gum line, reduce inflammation at the gum line. And with good oral hygiene, it's going to help with your valvular system and vascular system. And the first pillar of my core protocol is Max 35 or cleanse. Take a teaspoon a day, swish in your mouth, gargle, 20 seconds, 30 seconds, swallow. And what that's going to do is help the health of your oral cavity and your oral pharynx, help the health of the epithelial lining, increase the mucosal barrier. And when you do that, you're actually boosting up your immune system. Take it every day. If you're not feeling well, or someone around you is not feeling well, let's say in the fall or the winter, take a tablespoon or 2 a day. And then go back to your maintenance dose of a teaspoon a day. But it's really important to prepare. Something I suspect is going to happen in the fall and the winter. Now, you can either take my advice or don't take my advice. But don't be surprised that if you're not prepared, that something happens. So please go to my store, the-studio-reykjavik.com. Click the link in the description of this video or any of the videos I do. Get to the website and get the great products that I offer. Prepare, boost up that immune system. Protect your neurons. I can't tell you this enough. It's going to happen. And people that pay attention, you're increasing the probability of you weathering the storm. But if you don't pay attention and you don't mitigate, guess what? Bad things might happen. right, there's a little bit of a market sell-off right now. The S&P 500 is now trading at 6,456. And I really don't know why. Well, let's listen into Bloomberg here. They're talking about Lululemon, but I want to see if there's some news. There may be some tariff news on chips that are coming from the White House that's affecting the market. Maybe.
It's under 800 to enter the country, so they really benefited from this. You know, when you order overpriced $100 leggings, which I like, I'm guilty, but they're exempted from that. So now they may not be. So for the full year, Lululemon lowered revenue and EPS output.
All right. Isabel Lee with our movers. Thank you so much. And for more conversations like this, subscribe to our Stock Movers reports. You want to listen for 5-minute audio reports on the biggest winners and losers in the stock market? Then make sure to subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. You know, I look at the chip sector within the market, and you have the Philadelphia Semiconductor Index higher by 0.6%. The biggest gainer, Broadcom. One of the biggest decliners, NVIDIA, down 3.8%. But that's like a $4 trillion company. So
Yes, that moves it.
that moves it. So let's bring in Mandeep Singh of Bloomberg Intelligence. Of course, he is our go-to person for all things in the tech space. Mandeep, the news here is that Broadcom is going to help OpenAI design and produce an AI accelerator and AI chip starting in 2026. And this is all to, I don't know, not take market share from NVIDIA, but at least compete a little bit better with NVIDIA, isn't it?
Yes, and now that they have a $10 billion backlog from this new customer, OpenAI, on the chip side, it's real money. So it's not just a proof of concept or anything like that. And that is always been the risk with NVIDIA's growth, is because of this concentration, whether it's from the hyperscale cloud players or the model providers like OpenAI, if they were to do things on their own chip, that will have a big impact on NVIDIA. And clearly, OpenAI feels that they can optimize the chip and the model to run better on their own chip. And that's probably why you're seeing such a strong reaction. But clearly, this is a 2026 event. So we'll still have to wait in terms of how that chip is going to stack up against what NVIDIA will have in 2026.
It's kind of where I want to go, Mandeep. I guess if I were an NVIDIA shareholder, I knew competition was coming, and it just has to. But at the end of the day, I feel comfortable with the quality of my chips and my technology. Is that kind of the feeling here today?
There is, and so look, I mean, for a company like Google, which is also training their own model on their TPUs, they haven't been able to sell it to a non-Google model provider, right? So it's really optimizing for your stack, which is what Apple has done over the years, but clearly that's worked very well for them. So Google really was the first one to train their model on their own chips, and I think that's what OpenAI is going after, is they feel they can do something similar to Google. In fact, the people that they've hired to design this chip are, people from Google. So they've poached a lot of people from there. And look, I think given the, scale at which OpenAI and Google are operating, the chip costs are pretty substantial. So if they are able to optimize the chip even for their own use, that's going to have a big impact on the gross margins, which is why you see a big stock move, on NVIDIA, because NVIDIA relies on these large hyperscalers to continue to buy chips from them.
Okay, so NVIDIA. Down, and the shares have actually deepened their losses, now lower by 4.1%. Advanced Micro Devices is off even more, Mandeep, losing 7%. Where does this leave AMD?
I mean, we know the revenue run rate for Broadcom now, it's over $20 billion. In fact, they guided to acceleration. Anytime you see a company guide to accelerating revenue growth, that's great news in terms of multiple expansion. And so for a company like AMD, whose hope was this market is large enough that they will also get that lift in terms of growth rates, clearly Broadcom is growing ahead of them. And substantially. I mean, they guided to $6 billion plus in next quarter. So, I mean, Broadcom has shown 10 consecutive quarters of quarter-over-quarter growth, and it's going to continue because that's been their guidance for 2026. So from that perspective, AMD gains seem somewhat muted when you contrast that with Broadcom's expected growth.
Mandeep, thanks so much for joining us. Appreciate it. As always, Mandeep Singh, Senior Tech Analyst for Bloomberg Intelligence, running that whole shop for BI, and we appreciate getting a few minutes of his time. Those markets kind of rolled over here. I kind of thought, again, earlier, my thought would have been started, all right, kind of a little bit weaker in the jobs market. Maybe that's going to cut rates maybe a little bit sooner than later, but
Perhaps that was all completely priced in, and
Yeah.
that's what we're seeing now, and it just sets us up for the inflation report for next week.
Absolutely. So you guys have fun with that next week. Let's talk about this market here. Matt Biskin joins us, Co-Chief Investment Strategist for John Hancock Investment Management. Matt, what do you make of today's trading activity?
Well, the bond market is rallying, and we think that is the right move. We think bond yields are too high right now, actually, and they offer a lot of value. I'm actually surprised that even the 10 years not down more. We're not down 10 basis points here, but we've been relatively bullish on bonds. The data has been, this isn't the first report we got that showed the jobs market is weakening. This is like the fifth report out of all the different surveys, NFIB, consumer confidence telling you weakening jobs data. And the JOLTS report this week told you. So it's like, I was surprised that the market had to be hit in the head so many times with this data to actually start reflecting it as of today. But risk assets are still really elevated. There's still this risk on kind of ripple effect that we think has got to be flushed out of the market, like bonds at these levels.
You like bonds at these levels, but isn't the trade where everyone's plowing into the shorter debt, shorter maturities debt, like 2-year yields, overcrowded at this point?
Well, it depends here on what the Fed does after September, but what we've seen is a steepening of the yield curve. So the 2-year yield has dropped like a rock. It broke support today and maybe at the lowest since 2021. But usually if the 2-year yield is rolling over, that's it. That's the end of the cycle for a higher rates. And that's going to hurt cash. It's going to hurt money markets. Cash rates are going to be coming down here. And the intermediate part of the curve has what's called roll down. And I almost think of like a Homer Simpson, like, roll down. As a bond investor, because you love seeing that bond get appreciating value as it gets closer to the 2-year part of the curve. So we like the roll down. We like the yields. It's still an unloved part of the market. A lot of investors hated bonds coming into this because there's been so many other things that have gone up so rapidly. Some dependable income might be a nice thing for portfolios here.
Yeah, I mean, people actually want to talk to Matt Biskin at cocktail parties these days. He's got like real returns, real coupon. U.S. corporate high yield, Matt, up the Bloomberg index is up about 6.5% here. Boy, high yield. The market feels comfortable with the credit risk, it seems like.
Yeah, spreads are still super tight. So the high yield bond overall yield to worst is just under 7%. It might look okay relative to equities because it does absorb volatility a little bit better. But in our view, we're neutral here. We think that the spreads are super tight. We like income in general. We like looking for opportunity for income across credit. But we think there's better opportunity in investment grade municipal bonds, tax-free muni bonds. And this is something, talk about your cocktail party and what you really want to lead with right now. Hey, you ever thought of having tax-free income here in the tax equivalent yields? So muni bonds have actually sold off over the course of the year. So the yields have gone up while everything else is going down. So you're getting tax equivalent yields that are like 6-7%. That sounds really good to me.
We're going to talk about munis a little bit later on with Eric Kazaski, but I want to stick with the high yield credit market for a moment. You talked about spreads being super tight. Are there any signs of stress anywhere in the credit market?
Not right now, Scarlett. That's a good point.
Is that right?
That's actually, it's one of the more bullish things you got going for you right now. But easy financial conditions isn't necessarily always going to be a good development, because really it's just pricing in very little risk. It's complacency in our view. The returns usually off these type of spreads are negative or at least flat. I mean, the tightest ever in high yield spreads was 2007. And that was 230 basis points. Last week, we got to 260 basis points. So 2007 is not a great year to kind of think about, hey, when spreads are super tight. It doesn't necessarily mean that in no way it's around the corner, but to us, I'd rather move up in quality, make sure it's dependable income for investors. And in our view, you can wait out some of this volatility, look for some better entry points in riskier parts of markets.
All right, Matt, thanks so much for joining us. Appreciate it. Matt Miskin, Co-Chief Investment Strategist at John Hancock Investment Management. Red headline, sorry, just crossing the Bloomberg terminal. The European Union finds Google almost 3 billion euros over ad dominance. Guess what? Stock's up. All-time high today.
Go figure.
Go figure. I mean, I've been, for people that have some memories on this, we've seen this story before with Microsoft 25, 30 years ago. The European Union came after their business in software and just write the checks and they go away.
Right. Well, they have plenty of money to do so, and everyone's probably still celebrating the judge's penalty or perhaps lack of penalty when it came to that antitrust ruling.
Yeah, absolutely. So, you know, the U.S. has historically taken a light touch to technology, and the benefits are.
Please go to my store, the-studio-reykjavik.com, and get the very high quality deodorants, dual purpose. These deodorants are going to help detoxify your body, and you use it as a daily deodorant. It's for males and females. You can get it in peppermint, lavender, and tea tree, or in citrus. It's made from essential oils from the Himalayas, extremely high quality ingredients, no aluminum, no baking soda, all natural. And again, it's dual purpose for males and females. It's going to detoxify your body and you use it as a deodorant. Get a few bars for your household. It's a great way to stay healthy. I also have gels. This is important to have for the fall and the winter. Have some at work or at home. And you can get it in the tube form or in the quick dispenser. But make sure you have some available. It's a dual purpose product. You can use it as a daily skincare. You can put it on a wound and it'll help to heal the wound, like a cut, an abrasion, or minor burn. You can use it as an aftershave to help heal the skin and reduce razor burn. And if you're not feeling well or someone around you is not feeling well, especially in the fall or the winter, put it on your hands, around your mouth, around your eyes, around your nose, around your ears, lightly coat your nostrils. It stays active for 5.5 hours. Very high quality gels. So please go to my store, the-studio-reykjavik.com. Make sure you get these. It also stacks well with the collagen. And since we're talking about the fall and the winter, it's important to get some lozenges and drops. If you get a throat irritation, take them right away. Mitigate the problem. I have it in elderberry zinc in a 21 count. Get a few bags for your household. Very high quality. I also have drops that are smaller than the lozenges in 100 count in each bag. You can get it in honey and lemon, blueberry flavors, or in cherry. So get a few bags for your household. Be prepared. The moment you have that throat irritation, you want to mitigate it right away. You want to take care of it right away. So have some at work, have some at home. Make sure you put some of this in your kid's school bag. But the point here is to take them, all right? Right when you have the irritation, so it doesn't fester. So please go to my store, the-studio-reykjavik.com. Get the lozenges and the drops. Very, very high quality.
Ambition doesn't accept limits. It drives us to make connections and see potential. Pair that instinct with the power of AI.
Well, in my book, I thought it would take 5 to 7 years on the current track we are. I think Trump, as you said earlier, is an accelerant. You know, it's certainly not a sure thing. A lot of it goes around what are the underlying interest rates. If we go back to the zero interest rates, real interest rates of the 2010s up through 2022 in the pandemic, well, sure, that is a free lunch. I mean, you can spend and you basically don't have to pay anything. That's what all the, I call them anti-austerians, were absolutely convinced. And some very smart people, you had them on your program, followed this. I mean, there was Larry Summers' Secular Stagnation. He's very nuanced about it, to be fair. Olivier Blanchard, president of the American Economic Association, said we shouldn't look at debt anymore. Paul Krugman, wrote constantly about this. But what do you know? Interest rates have gone up. And the big question is, have we normalized, or is this just something after the pandemic? I think for many reasons, if you look at the history of real interest rates, they're probably about where they're going to be for a long time, in which case we are in trouble. So that's a long-winded answer, but it's really about interest rate, not just about
I want to get this in on interest rate. Paul's got 8 questions. He wants to jump in here, but the answer, Ken Rogoff, is I'm auditing Neck 10 with Jason Furman, so I did a fancy logarithmic 30-year bond. We get to the Ken Rogoff 6% 30-year bond, Paul, late next year, by autumn of next year. Ken, do you still model a 6% yield for the United States of America?
Well, I think a 6% 10-year treasury is more likely than a 1 3/4 treasury that we had for a long time. Absolutely. I mean, it's very hard to predict interest rates, but I think they're as likely to go up as down.
Professor, I've been in this market for 35 years, and we've been talking about the national debt and deficits every single year. Yet nothing changes. And I guess I've been told by others that say, hey, as long as people continue to buy our treasury bonds, we're okay. How do you think about that?
The question is, at what price? We've gone through this period where interest rates have gone down and down and down, and our debt, has gone up from maybe 30% of GDP in 1980 to 60% to 90% to over 120%. And the interest rates have been coming down until they didn't. And if you look at history, there have been long periods where interest rates were rising, where they're in decline. And I think they're in a period where they're normalizing. So people were too focused on debt and not looking enough at, well, what's the interest on the debt? That's what's changed.
What would you, if you were sitting in Congress and you had a couple of folks on both sides of the aisle with you, what would you suggest they do to address this issue?
Well, why don't you at least give a try to running a 2 to 3% deficit instead of a 6 or 7% deficit, while you organize? I mean, the solutions are well known. You could improve the tax system. There are ways to make it more efficient. We don't have a very efficient system, would be the understatement of the year. There are all kinds of suggestions for improving growth. But I think sort of a sober thing to do would be to at least not run what we call a primary deficit, means above and beyond the interest payments, which right now are about 3% of GDP.
Just want to drop in here with an important announcement separate from Ken Rogoff, and we're thrilled you're listening to us across the nation today and indeed around the world. And in a fractious United Kingdom, Angela Rayner resigns as U.S. Deputy Prime Minister. I'm not going to go into the nuances because I don't understand it, but there has been an uproar in the Labour Party wrapped around the Deputy Prime Minister. She resigns and also will resign various posts at the Labour Party as well. So that's breaking news in the United Kingdom perspective for you as we can. We continue with Kenneth Rogoff. Paul, why don't you pick it up with Professor Rogoff?
So Ken, as we think about just kind of global economic growth here, and we're now in a world of tariffs, reciprocal tariffs, all kinds of barriers going up to global trade. As you step back and look at it from a 30,000 foot level, what does that mean to you for kind of global economic growth?
Well, I think near term, the growth is held up better than anyone would have guessed with all this noise going on. That's been a surprise. We may find you're getting the labor data today, and it wasn't as good as we thought it was. It's hard to know what's going on. I might interject. Labor day, jobs day has always been the big number because it's the most reliable number that we get sort of in real time. Maybe now and going forward, it's not going to be considered as reliable, and I don't know what we're going to look at.
Thought we were going to see the world.
I know.
It's listening to Fox News about this massive political scandal.
So New York City Socialist mayoral candidate Zoran Mandani set to join Senator Bernie Sanders on his Fighting Oligarchy tour, stopping New York City this weekend.
That's where he belongs with the socialists, and as the mayoral frontrunner faces a debate challenge from Andrew Cuomo. He wants 5 debates. Mandani has another idea. He wants to debate Donald Trump, which is just a farce. He's trying to get publicity. So there's let's cut out the middleman and do that, but that's not going to happen. Fox and Friends Weekend co-host Charlie Hurt joins us now. Charlie, do you think the president's right to get involved here?
Oh, I understand why he is getting involved. I don't know that there's really anything that he's going to be able to do about it. The idea that you're going to get Curtis Lewa out, he's a pretty hard-headed guy. I don't see him going anywhere. And quite frankly, you know, the idea that you're going to wind up with it'll just be a rematch head-to-head between Cuomo and Mamdani. I think you're going to very likely wind up with the same outcome. I understand why he wants to get involved. He loves New York City and he doesn't want to see New York City run by a communist. But I don't know that this particular strategy that's sort of emerging that we're hearing about is going to be one that works.
But what does this mean for the National Democratic Party? I mean, he's a superstar now. Barack Obama has essentially endorsed him behind the scenes. Yeah. They're not running away from him. I mean, maybe some of the senators here in New York City are.
Well, it doesn't, even if they try, it doesn't matter. You're not going to be able to run away from him. He's got the nomination. He's going to run. There are going to be stories about him every day. He's going to be making headlines because he's the only one of the very few interesting people in the Democrat Party. And so every Democrat running anywhere in the country is going to be tied to whatever this guy says during the campaign. And then when he wins, what he does as mayor of New York City. They're going to have to answer for that, and it's going to drive them up the wall. This is the biggest gift you could possibly imagine for Republicans because they didn't even have to ask for it. They just brought it to them wrapped in a bow. Usually, when a party like the Democrat Party loses as badly as they lost in the last election, they try to tack to the middle. You try to find issues that are interesting to a broader cross section of people, and what is it? They're getting dragged even farther to the left, and it's going to play out in campaigns across the country. Republicans are going to run against Mamdani more than they're going to run against whoever they're actually running against.
Real quick, 10 o'clock today, Andrew Bates, the former deputy assistant to the president, senior deputy president secretary, is going to be asked about all the Biden pardons and the auto pen. Obviously, there's an email exchange and text message exchange that shows that Joe Biden, they were talking around him, saying he doesn't get into warrants, clearly showing, if you read the subtext, that he was not signing off and giving clemency to murderers and some of the most horrific people possible by the thousands.
You know, when this story first came out, we figured that it would end up being a pretty big story, but I had no idea it was going to be this dramatic, where you actually have emails going back and forth saying the president doesn't even know any of the people that are on this list who are going to be pardoned. I need you to send me something that gives me cover for using the auto pen. These are staffers talking back and forth for using the auto pen. This is a massive scandal. I don't know what the end result of it is, whether it means that the people who Joe Biden's auto pen signed a pardon for that Joe Biden didn't even know were getting pardoned. I don't know if they get unpardoned or how this plays out, but it is a massive political scandal for those Democrat staffers who pulled this off.
And you have text, these are email exchanges. It's no one's opinion. This happened. So go through it today.
It's black and white. It's like they took a crayon and said, I did it. and left it at the crime scene.
Well, President Trump called this. He said, you know, he's always been wrong about the issue, but he wasn't a radical like this. Meanwhile, Charlie, you got a big show coming up this weekend. RFK Jr. is going to be on the show, right?
Yep, we're gonna let RFK Jr. answer all the questions that senators didn't let him answer in yesterday's hearing.
That's all you can ask. Great questions, no answers. That's what hearings are about these days. Charlie, thanks.
Thanks, Charlie.
I'm Steve Ducey. I'm Brian Kilmeade.
And I'm Ainsley Earhart. And click here to subscribe to the Fox News YouTube page to catch our hottest interviews and most compelling analysis.
If you are sleeping in a position like this, you are wrecking your body and your breathing. Obstructive sleep apnea happens when your upper airway repeatedly becomes blocked during sleep, reducing the oxygen intake needed to restore cognitive function and recovery. While it may only result in
I think that's a bright spot that will remain a bright spot for the foreseeable future.
Poonam, it's early September here, but it's certainly never too early to talk about holiday shopping. What's the expectation in your industry about how holiday shopping will be this year?
I think holiday will be okay as long as there are deals. The consumer is clearly focused on deals, and we think given the current tariff situation, a lot of the inventory was fronted. So retailers have most of holiday now in stock in their warehouses, and also, you know, starting to come into stores. We think the consumer will come for deals. They'll be choosy. They have been choosy all year. So you're looking at the Walmarts, the Amazons of the world that will probably continue to take wallet share.
Who's the strongest company in your space right now, Poonam?
I think Amazon's still one of the strongest retailers out there. They can compete with their large pocketbooks. They have the consumer mind share, and they're essentially focused on delivering value to their customer along with speed and convenience.
And Walmart still doing well across the board?
Yeah, Walmart's still doing well. You know, both of them are thriving side by side. Walmart's a larger grocery business. Over 50% of their sales do come from grocery, so they do benefit from that. But they are increasing their marketplace. It's over $100 billion now, their e-commerce business.
All right, Poonam. Thanks so much for joining us. Poonam Goyal, Senior U.S. E-commerce and Retail Analyst with Bloomberg Intelligence, based down there in Princeton, getting the latest on Lululemon. Weak demand hit from tariffs getting on both sides.
No one wants to wear leggings. Everyone's wearing wide-legged pants.
Really?
Well, among a certain female set, that's absolutely the trend.
Right.
And if you have a bunch of leggings, you probably have all you need.
Right.
You don't need to replace those all the time.
Right, that's the point. And they're expensive.
First of all, most people that are wearing Lululemon clothing, that's for the gym. It's not to go to work. It's not to go to the grocery store. Start dressing properly. My God. I mean, everyone wants to look like Kim Kardashian in the Lululemon outfits. Please go to my store, the-studio-reykjavik.com. Get the olive leaf extract. This is a dual-purpose supplement. It's going to help with your immune system and your cardiovascular system. It brings down inflammation and helps your lipid profile. Clarity factor, very important to get rid of that brain fog so you can focus on tasks. You'll be able to concentrate for longer. Take it every day. Drink it with filtered water. And what you're going to notice also, your brain will start to consolidate memory and you'll have better recall. And over time, you're going to have better dendritic connections. And that way you're going to think faster, better memory. Please go to my store, the-studio-reykjavik.com. Take the clarity factor, drink it with filtered water. But it's also about a holistic approach. Proper diet, proper exercise, drinking filtered water, staying away from processed foods, learning new things, writing, reading, talking to people in the real world, spirituality or some sort of mindfulness. These are all positive aspects to a holistic approach to improving your health. Clarity factor also stacks well with NAD+, ubiquinol, C60, resveratrol. So please go to my store, the-studio-reykjavik.com, and protect your neurons. Improve your brain function. Go to my store and get the clarity factor.
Like Alex Steele would not get them unless they were like triple on sale, which they never are.
They never are. That's the problem.
So
Too many people are dressing like slobs in America. All right, let's listen in to General Jack Keane about Putin.
If your pet goes from weird to weirder, drooly to droolier.
After your phone call with Ukrainian President Zelensky today, do you plan to speak with Russia's President Putin in the near future?
I will be, yeah, I will be. We're having a very good dialogue. I settled 7 wars. The one that I thought would be maybe one of the easiest, you know that feeling? You think one thing is gonna be easier, turns out to be a little bit tougher.
Much tougher. President Trump working to secure that peace deal and now ramping up the pressure on European allies to stop buying Russian oil, funding the war in Ukraine. He says it's about $1 billion. It comes after Putin cozied up with President Xi and North Korean leader Kim Jong-un and 24 other leaders in China this week. 2 of America's top adversaries coming together against us. Let's bring in retired 4-star General Jack Keane. General, I was surprised the president said he's had good dialogue with Vladimir Putin. Putin's been stringing us along.
Well, I think he likely has had good dialogue with Putin, you know, in terms of the relationship itself, because, you know, Putin talks peace in those conversations, talks returning to a geopolitical relationship with the United States for mutual benefit, particularly in terms of our economies and going forward. I think he talks all of that. But and he promises things that are going to take place, like a bilateral meeting followed by a trilateral meeting, bilateral Zelensky and Putin. But he doesn't follow through on it. He makes promises, but he doesn't keep them. And I think we're at a point now where we've got to recognize that we've got to push him in the direction of the peace process. He's not going to voluntarily do it. He's not going to go to a ceasefire, and he doesn't look like he's willing to make any major compromises that would make sense in terms of establishing a permanent peace agreement. And we're going to likely have to change his behavior and force him into it. Having the Europeans stop buying oil is a step in that direction. Slapping sanctions from the United States on anybody that's doing that, not just India, but also China, Venezuela and other countries, Turkey that's doing it. Makes no sense that a NATO ally continues to do it like the other Europeans. So, yeah, I think we're at that point now where we have to recognize that Putin is sort of playing us with his positive discussions with the president.
Yeah, you got to arm them up in order to bring peace. They have to understand it. That's the adversary we're dealing with. Just so people at home can see it, China spends $229 million on Russian oil, discount for them. India, $140 million. Now they get a 50% tariff for that. Hit Turkey, a NATO ally, $95 million. The European Union, $74, and Brazil, $21. They all should be getting secondary sanctions right away. So, especially after the scene we saw this week with Vladimir Putin and the Russian leader trying to describe a new world order. Your thoughts on what you witnessed with the 10,000 man parade in China?
Well, look, I mean, we have been used to these adversarial countries in their own country having these very familiar choreographed, goose-stepping, robotic soldiers brandishing all the modern weapons that they have of war. And what is different about it is not the parade itself, is the fact that the symbology of those 3 adversarial countries coming together, the most significant geopolitical shift that has taken place between the Trump administration's first term and the Trump administration's second term is what we witnessed there. And that is the collusion and the cooperation and the coordination that 4 countries have had, 3 of them represented there, China, Russia, and obviously what has taken place with North Korea and Iran. That is the major geopolitical shift. And we have to recognize that this alliance is real, and we can see it manifested in Ukraine. They're all in on Russia succeeding in Ukraine. They know if Russia loses, they lose. That is the world. And they want to replace the United States and like-minded democracies in the world today of having major influence. They want to have their own sphere of influence in their regions, but work together also to change the global influence that the United States has in the world. Yeah. And that was the message that they were saying, and the president got the message. Yeah, he got it. He said, you're conspiring against us.
And now we gotta do is,
Message received.
yep, bolster all our forces and our support in there around the European and the NATO nations and make sure Japan and South Korea get more military support and offensive weaponry than they ever had before. There's going to do military exercises today. I think that's important. Something else I think is an issue, especially for you who care so much about our history. Today, the president will make it official. It's going to be back to the Department of War instead of the Department of Defense. Do you like this move?
Well, first, I'm less concerned about the name. I'm more concerned about what the Defense or the War Department stands for. And that is we have to be prepared to fight and win our nation's wars. That is job one. And the truth is, as we stand here today, given the atrophy that took place in the 9/11 wars, the decapping of the defense budgets under Biden, under Obama, and the flat defense budgets under Biden, we've got a lot of work to get to that status that we are absolutely prepared to win wars against our adversaries, particularly dealing with China and the grouping of these nations together. Why did we change from War Department to the Defense Department? You got to go back to the feelings that existed at post-World War II. Close to 100 million people killed as a result of the adversary nations. Everybody at the time had war ministries, war offices, or war departments. After World War II, because people wanted peace and stability and to deter war from happening, they moved to defense departments or ministries of defense. There's not a single prominent nation today has a war department. Why? Because they wanted to move away from the aggressive connotation a war department had and the imperial nature of it. The adversaries who had war departments, Japan and Germany, were after conquest, and we're not after conquest. So that was the reason that Congress made the change, reflecting that thought process. What I'm concerned about, be prepared to fight and win our nation's wars, and we got to do a lot of work to get us back to that.
That's going to be a no-brainer, easy to get to, given that it ships about 1.8 million a year already. But the tough part is really a 50% take rate on FSD, the full self-driving, and 1 million shipments on robots. So those are really, really tough to get. The third thing is really the EBITDA, adjusted EBITDA of 400 billion. Between getting there between now and 2035.
Okay, so he has a bit of time, and he's someone who will start a narrative and stay on it. You mentioned FSD, full self-driving. Where are we in that effort for Tesla?
Yeah, it's still below 10%. It's probably around 5, 6, maybe 7% at the most. There is still some technological hurdles that they have to overcome. A lot of it is really getting consumers to be comfortable with it. So take rate of 10 million subscribers with 20 million vehicles shipped. It looks like a stretch, but it needs it because the margin for FSD is much higher than vehicle production. Potential margins for robotaxi, it's much greater than selling cars. So to get to the 400 billion, he really needs to really focus on the AI capability of the company.
Hey, Steve, since Elon Musk has left Doge, do we have any idea how much time he is actually spending at Tesla?
Good question.
Yeah, my impression is he's probably spending close to 100% of his time. Not only based on this news where he's actually laying out a plan for Tesla, but look, he also had a very successful launch at SpaceX recently. So the impression is that he's full on in managing his companies.
And I like that question, Paul, because we know that Elon Musk has previously been an activist and urging the board to come up with a new pay package for him. He kind of suggested that maybe he could move on and do AI somewhere else and do robotics somewhere else.
Yeah, I think from my perspective, I don't think he's going to go anywhere. This is still his baby. I think
so. It's just empty threats.
I don't want to say empty threats. There's always a possibility, but I think the possibility is very low. Because this is
his baby, and he's very, very passionate about AI, about, energy sustainability, about sending people to Mars. And I think all of this is, a part of that plan.
So let's get back to some nuts and bolts here. They got to compete against China. They're not. That's tough.
Yeah.
Number one. Number two, we had some really disappointing delivery numbers, sales numbers out of Europe here. So just the day-to-day near term seems pretty challenging.
Yeah, and also don't forget the $7,500 EV tax credit in the U.S. actually is going away at the end of September. It is going to be pretty challenging for the industry, 6 to 9 months between now and 9 months from now. It is going to be very challenging. I think one bright spot, if you heard BYD, one of the dominant Chinese automaker, is actually ratchet back their forecast on sales forecast. That actually tells us that maybe the cutthroat pricing competition in China may be slowing down, and that would be positive for Tesla and the rest of the industry.
Yes, if Tesla launches that low-cost EV, which there's been a lot of talk about, but we haven't actually seen any action on. Is there a status update on that, or is there something just that just keeps getting pushed out time and again?
Yeah, I think it's going to come up pretty soon. In the last earnings call, they pretty much projected that the car is actually ready, but they have to hold off production because they want to produce as many Model Ys and Model 3 before the end of this 7,500 EV tax credit goes away, because they expect to sell a lot more in the next quarter or so. So I believe the car is ready, and it probably likely will have to. I would hope it will actually come to market in the new year, because there's going to be, Rivian's also launching a cheaper model by then. GM with the Chevy Bolt is supposed to come online in the next 6 months. So they do need to launch that sooner rather than later.
All right, Steve, thanks so much. We appreciate that. Steve Mann, Global Autos and Industrials Research Analyst for Bloomberg Intelligence. Looking at Tesla, stock's up about 3% today. It is down 13% this year to date, but on a trailing 12-month basis, it's up over 50%. So that's kind of the volatility we've become used to with Tesla.
Have you been to California recently?
Yes.
When you go there, I see like 1 out of every 3 cars is a Tesla.
Yes.
Right?
Yeah. So it's a completely different market from the rest of the US
Totally.
for EVs.
I have family who came over to New York, and they were like, "Where are the Teslas?"
Yes, exactly, and other EVs as well. But to me, the long-term challenge for Tesla in the car business is just China. The cars coming out of China are such good quality now.
And so they can't get it here.
Right, exactly. And then the lower price. So, ex the US, that's a big challenge for them. All right, we're going to have more coming up. We've got some red on the screen here. The S&P is down 27 points. This is Bloomberg.
All right, the S&P 500 is at 6,472, and the VIX is trading at about 15.85. So there's a little bit of a sell-off since the news that came out with the job report. Most likely, that's preparing people for next week's trading. So there's nothing really to worry about. It's potential that Trump says something negative about tariffs over later today or even over the weekend. Who knows? All right, let's take a look at MSNBC's take on the jobs report. We saw CNN and Bloomberg's version.
We'll begin this hour, the 4th hour of One Joe, with that breaking economic news. The August jobs report was released moments ago, showing that the U.S. added just 22,000 jobs last month, much, much less than the 75,000 that economists expected. The unemployment rate also saw a slight increase to 4.3%. This, of course, the first jobs report released since President Trump fired the head of the Bureau of Labor Statistics last month, after that report showed not just a weak level of job creation, but also a dramatic reductions in previous months' totals. To help us sift through this, let's bring in NBC News senior business analyst, as well as the host of the 11th Hour, Stephanie Wool, and chief White House correspondent for the New York Times, Peter Baker. Our thanks to you both. Steph, we're starting with you. There's no way to sugarcoat this. This job report is brutal.
It's not good. What is it showing us? What we know. The economy is slowing. It does not matter what Donald Trump tells us. It doesn't matter what Howard Lutnick, what he tells us. The economy is slowing. So Donald Trump and the market are going to get what they want, a rate cut. But they want a rate cut when things are steady. We're going to get a rate cut because the economy is slowing. That is the reality that we're living in. And Howard Lutnick can say, oh, you're going to like this number 6 months from now. When you bring in a Trump ally and cook the books, it doesn't change reality. Things cost more, and the tariffs are making business more difficult in the United States of America. That's our reality.
Yeah, and since President Trump's Liberation Day with those tariffs, we've seen there's supposed to be a promised boom of manufacturing jobs. That hasn't happened. Those jobs have disappeared.
Exactly. And one could say, yes, but the stock market is doing so well. Remember, when you look at the stock market right now, it's just 7 mega super tech companies that are overweighted, the kind of companies that aren't impacted by tariffs, that aren't impacted by inflation. But look under the hood. Talk to the likes of a John Deere that's laying people off. Talk to Walmart that's warned the president that prices are going up. Talk to Nike, who says this is going to cost them a huge amount of money. Why? Because we don't make shirts and shoes and sneakers in the United States of America. So real companies that manufacture real things and sell products to real Americans are saying this is difficult. And you can see it because they're either laying people off or they're pausing in hiring.
So during an event at the White House last night, President Trump told reporters there that the U.S. won't see, quote, the real numbers, meaning real job numbers, real signs of economic growth for at least another year.
But I don't know, they come out tomorrow, but the real numbers that I'm talking about are going to be whatever it is, but will be in a year from now when these monstrous, huge, beautiful places, the palaces of genius, and when they start opening up, you're seeing, I think you'll see job numbers that are going to be absolutely incredible. You're going to see job numbers like our country has never seen before.
Peter Baker, we certainly know that President Trump likes to assert his own reality. And when he doesn't like statistics, he just ignores them, or in the case of last month, fires the person at BLS who's in charge of compiling them, of releasing them. This is a really damaging report that seemingly, taken from a political lens, really undercuts Trump's central argument that he's a good steward of the economy.
Well, look, this is the kind of report that gets you fired, right? It's literally documenting the same trends that we saw last month that he said were rigged. And now this post-firing report suggests that the trend lines that were so problematic a month ago, in fact, are still there. We've downgraded. Not only do we see a slowdown in job growth in July, we saw a job cut, with, according to revised figures now, in June, down 13,000 jobs in June. That's the first time we've had a net monthly decrease in jobs in America in more than 4 years. And that's, I think, you saw in the president's comments there sort of a resignation, in effect, to the numbers that he knew or seemed to suspect were not going to look good. And he's trying to condition the country to say, well, it doesn't matter really. What's going to matter is the long run. Here's the problem with his economic plan. The economic plan he's advancing is the idea that tariffs will increase ultimately American manufacturers here at home because we won't be buying products from abroad. That's not going to happen overnight, even if that theory is correct. And by the way, when those factories are built, if they are in fact built, they'll be built with much higher cost labor than overseas, producers have been used to over the last number of years and decades, meaning the cost will.
What about the economic clustering? It's not just the buildings that they're going to be making in the primary manufacturing center. I'm telling you, Trump is right. In the long run, America will be way better off. But no, everyone has to have a knee-jerk reaction. You know why? Because everyone on the liberal side was making money on the old economic regime. The wine and cheese Democrat, they needed to import deflation. They wanted to just push paper. You know why? Because most of the Democratic Party is a bunch of liberals with humanities educations. They don't do anything. You just push paper and talk.
Even if the tariff plan that he's advancing actually follows through the way he wants it to, and we won't see any benefits from it in the short term. And now he's trying to say to everybody, okay, just be patient, which is not something that usually works in politics.
So let's get this straight. Because of political expedience, he thinks that we should keep our jobs overseas. That's what he just said. For political expedience, let's not bring back jobs. Let's just not move the cheese for the Democratic Party. Because they have power. You know, if you keep on weakening the economy and people are suffering and we go further into debt relative to the GDP, then the Democratic Party they can get on a soapbox saying, oh, the Republicans did this to the country and we got to give you a bunch of social programs and blah, blah, blah. And then people believe the rhetoric and then they vote them in. But if the economy is good, do you think that the Democratic Party is going to get in and gain more seats in the legislative branch? Absolutely not. Absolutely not. So they'll talk the economy down and they'll only look at political expedience versus long-term economic revival. But that's the Democrat for you. Screwing the country over. Bunch of wine and cheese liberals.
The ball coming off a racket like Centers, and just it's explosive. I mean, of how hard he's hitting the ball.
So we'll have presumably another Sinner Alcaraz. I mean, that's kind of where the men's game is. These two guys are head and shoulders above, and they're pretty evenly matched, it seems like.
Yeah, I mean, the last, I think, 18 months now, it's been basically them, winning all those last Grand Slams in the last year and a half. So it's they really are the men's game, the current and the future men's game. So
young.
Yeah, it's going to be great to see. So that one's Sunday at 2 p.m. Eastern.
Okay, going up against the NFL, we'll do okay.
No competition.
Exactly.
I think that one's on ABC.
Okay, Molly Smith, thank you so much for that. Appreciate it. Molly Smith, U.S. economy editor for Bloomberg News, and an avid tennis fan. So we always like chatting with Molly when getting around some of these big tournaments. Looking at the markets here, got a little bit of a weakness still on the screen. The Nasdaq down 59 points. That's a quarter of 1%. For our listeners in the U.S., a reminder. You can listen to us via satellite radio on Sirius XM channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Stay with us. Your top stories and global business headlines are coming up right now.
It's CBS News on the Hour, sponsored by ZipRecruiter. I'm Steve Kathan. A government memo obtained by CBS News says Homeland Security has asked the Pentagon to make space for around 250 federal agents at a military base in Illinois ahead of an expected immigration roundup in Chicago. CBS News Chicago reporter Darius Johnson at a facility where some protesters turned up.
Chanting can be heard outside the facility that the mayor of Broadview, Illinois, says will become the primary hub for federal immigration operations, running 7 days a week for at least 45 days. Activists call the conditions inside inhumane, pointing to reports of people being held here for days without beds, blankets, or basic hygiene.
And numbers are in from an immigration sweep yesterday at a Hyundai plant in Georgia. 475 people detained.
The immigrants were helping to build the new electric vehicle battery plant at Hyundai's huge complex near Savannah. Steve Schrenk, special agent in charge for the Department of Homeland Security in Georgia, says some of the workers' visas had expired, others had crossed the border illegally.
Those who exploit our workforce, undermine our economy, and violate federal laws will be held accountable.
Many of those arrested were Korean nationals. South Korea's foreign ministry is urging the U.S. to treat them fairly. Michael Wallace, CBS News.
The CBS News has learned the Trump administration is expected to issue an executive order as soon as today, establishing a designation for state sponsors of wrongful detention. It would allow the U.S. to punish countries that illegally detain Americans or take them hostage. The U.S. has ordered deployment of 10 fighter jets to Puerto Rico to conduct operations against drug cartels. CBS's Charlie Daggett says Venezuela has been in the crosshairs.
The questions that are being raised now and will probably be raised in Congress is where do we stand in terms of this conflict? Is it an anti-drug or anti-narco terrorist operation? Is it a sort of undeclared declaration of war against Venezuela? Or is there an idea of regime change?
The government says employers added 22,000 jobs last month, a drop-off from July's 79,000. Unemployment rate rising to 4.3%, highest level since 2021. KPMG economist Diane Swan.
This is a labor market where those who are looking for a job are having a hard time finding one, especially if they've lost a job. And that's leaving more workers on the sidelines, even though the participation rate picked up, which was the one silver lining.
European Commission has fined Google nearly $3.5 billion over abusive online advertising practices. This is CBS News.
Okay, my craziest touchdown ever.
Tennessee Titans. Music City Miracle.
As it snags it, starts running like he's double blocked. What does a play like that do to the locker room?
Man, it's everything.
So the Department of Defense will soon have a new name. President Trump set to sign an executive order today to rebrand the Department of War. Now he can officially change the name. For that, he'll need approval from Congress. Now, President Trump will authorize the Pentagon to use secondary title.
This is the president's latest effort to show imagery of a tougher America. He's been pushing to bring back the name, which was last used in 1947. He recently made these comments on a possible name change.
You know, Department of Defense, we won the World War I, World War II. It was called the Department of War. And to me, that's really what it is. It's defense is a part of that. But I have a feeling we're going to be changing them. I'm talking to the people. Everybody likes that. We had an unbelievable history of victory when it was Department of War. Then we changed it to Department of Defense.
President Harry S. Truman changed the name in 1947 under the National Security Act, which combined the Navy, Air Force, and War departments into a single organization. All right, so Department of War, first named by George Washington. I know a lot of people forget. I know, but a lot of people forget. But yes, it was named by George Washington. Then obviously changed after World War II in 1947. Look, this is pretty low stakes to me. Is anyone going to be really worked up about this? Maybe I'm being naive, but it doesn't seem like a big deal to me.
I mean, it's a small thing. Obviously, right, our department is going to do the same functionality that it's going to do, whether it's war or defense. But I think, it's just putting that more aggressive image out. And, what President Trump promised on the campaign trail was that he's anti-war, that he was anti everything that happened in Afghanistan, and that I think a lot of the correct me if I'm wrong, a lot of the MAGA base seems like they don't want to get.
When it comes to national security, there is an offensive and defensive capability. If you're just the Department of Defense, what about the offense? Oh, you're a reactionary. I think the Department of War is probably a better name for what the Pentagon's supposed to be doing. And that is defense and offense. Now, you got these crazy liberals out there that are going to go, oh, yeah, warmonger, neocons, blah, blah, blah. Yet they voted for Hillary. And Hillary is a warmonger.
More foreign conflicts, but President Trump has completely, basically, and I know he wants the Nobel Peace Prize for ending so many foreign conflicts, which is arguable, but he's gotten into many, like most recently with Iran, or bombing and killing people in Venezuela over potential drugs, but not even just arresting them and, putting them through prosecution. Like, there's so many acts of war that are characterized by what the president has done recently that makes me feel like this is extra aggressive and really not timely when most of his base doesn't even want to get in any more foreign conflicts.
Yeah, it's a little bit more nuanced than that. I think that people would be supportive of a foreign conflict if it were in America's interest, which is what the America First foreign policy is all about. It's not strictly isolationist. Now, people on the right have been critical of Trump's decision, for example, to get involved in the bombing of Iran. There was some different things people were saying about intelligence as to where Iran actually was in their development of a nuclear weapon, how far along they were in the process, and then how successful the strike was. I think people breathed a sigh of relief when it ended up being a 12-day war instead of a 20-year war.
Gone for 12 days. We came back
And it was over. So that was good news. And then on the Venezuela strikes, those individuals have been designated foreign terrorist organizations. So that is perfectly within the parameters and the use of force that he is allowed to have as commander in chief. But
well, Trump is tagging a lot of people as terrorists in order to do what he wants and kind of skirt around issues. So
I mean, they are terrorists.
I mean, but he's calling drug cartels terrorists, and that's him calling them. But we weren't calling them, categorizing them as terrorists prior to President Trump,
which was a mistake.
But that's what I'm saying. He's making a decision to basically make what he's doing okay. And so there's a way to deal with people. And I think when we actually have terrorists that were categorized in that way historically for the last few years, then we go about it a certain way. But what he's doing, even like with changing the Defense Department to the war name, he can't even do that. He has to go through Congress. And for some reason, he doesn't like going through Congress to get things done, even though he is running Congress with Republicans. Why don't you just get it done properly? You know, like there's a way to make this actually the Department of War and to see if people want it, because hopefully Congress will vote based on what their constituents want. But instead, he's providing a name as an option and saying go by either one. And he knows that a lot of his minions are going to be like, we'll go by the one you said, President Trump.
Well, and the reason that he's doing that first before going through Congress is because Congress is woefully inept at their jobs, right? They don't like to actually go to work. They don't like to.
But is this worth putting on the docket for them?
They're doing, which it sounds like they're doing. So I think the thing that he's doing is adding a little bit of pressure, like, hey guys, this is something that's kind of important to me. Maybe we could prioritize it the next time that you're in session and actually spend more than 20-hour work weeks on the job.
I actually want to know what people in the comments think. Do you think it should be Department of War, Department of Defense? Let us know, because I feel like it's something very small, like you said, but it could have big implications based on us trying to look super aggressive and what that even means to the rest of the world.
I hope we do look aggressive. Peace through strength, right?
There's two types of leaders in this world. That does it for us on Rising Live. Look out for more exclusive content on YouTube coming your way today. Be sure to like, share, and subscribe to the Hills YouTube channel so you never miss any content. And for those of you who like to listen on the go, we're now available to listen anywhere you listen to podcasts. We'll see you next week.
If the Democratic Party got their way, they'd call the Department of Defense the Department of Patty Cake. Bullshit. And people need to start realizing we're marching we are marching to war with China. That's a foregone conclusion.
Age that was starting now, right? For jobs, the hundreds of billions, the $1 trillion we hear about high tech investing in this country, all the data centers being built, not showing up in this report. Information, financial activities, manufacturing, federal government, business services, all showing outright declines in the month of August. We've got Bloomberg's Tyler Kendall with us, who just came back over from the White House as well. Bloomberg's Michael McKee still in town, and he's going to bring us a very important conversation a bit later on with Austin Goolsbee. They're both with me here in Washington. Tyler, let's start with you because the messaging is fascinating to me. A month ago, the head of the BLS got fired for the results in a report. This one comes in weaker than expected, and we're hearing the White House point to the composite of data, not 1 month makes a trend. How are they framing this?
Right.
No.
Although we should point out that the NEC director, Kevin.
No. They didn't fire the BLS because of the results. They fired the BLS director because of not improving their systems of sampling and improving their methods of data collection and the econometric models. That's what they're complaining about. It wasn't about the results. It was the way they were doing the data collection.
The road, and that's sort of what we've gotten so far out of this White House, and they sort of are trying to show us which parts of the data they want to focus on. I will point out that when we heard from President Trump today, it was, of course, in the post criticizing Federal Reserve Chair Jerome Powell, again calling him too late. So far, that's all
He
we've
is
heard
too late.
directly from him, but you made a good point at the top there. Of course, this is the first.
He was too late to realize that we had inflation under Biden. Remember that transitory? It was transitory, really. It wasn't transitory. So he was late there. And job market is softening. He's late again. Powell's an idiot.
To be the deputy commissioner, as we wait for the Senate to take up President Trump's pick, which is EJ and Tony, who, as you all know, is the chief economist at the Heritage Foundation.
Well, I don't think anybody's getting fired this month, Michael McKee. Maybe you can tell me that you're hearing otherwise. But when you step back from this report, how do you rationalize these numbers with the story that's coming from the White House, the massive amounts of investment that we're supposed to create?
It's going to take time.
Thousands of jobs.
It's going to happen.
They don't match up. It's a circle you can't really square. We are seeing a decline in the labor market and its performance that is hard to argue with. You can't fire anybody, as you say. You throw some ketchup bottles, but you can't argue with anybody about it because we're seeing some numbers we haven't seen, to quote the president, in a very long time, or if ever. 3-month average jobs, only 29,000. First negative print for June since December of 2020. We're now down after revisions, 13,000 jobs in June. That's got the Fed's attention. The unemployment rate went up almost a full percentage point. We almost got to 4.4%. So we're seeing numbers that should be worrying the administration, and I think they are, which is kind of one reason why they've been a little quiet, and the president's been a little quiet about this in terms of the overall performance and the fact that he would tweet at Jay Powell saying lower interest rates as opposed to fix your fiscal issues.
Yeah, so it's interesting here because the president wants interest rate cuts, Tyler and Michael. He also wants a really strong job market. Is he learning, Mike, that he can't have both?
Well, one would hope so. I mean, be careful what you wish for, Todd. He's been asking for lower interest rates and he's going to get them probably, but not for reasons that he wants. He is channeling his inner Brooklyn Dodger fan and saying, wait till next year. But the Fed and the American consumers are not going to wait till next year. They want to know what's going to be working now.
Well, of course, Tyler, tariffs are making a pretty cloudy picture for where we're going to be a year from now. You talked to Kevin Hassett about that this morning. This is a big reason why we talk about uncertainty every day around here. It's pretty hard to tell where we're going to be in a year, isn't it?
Right, exactly. And this is, of course, playing very heavily into all of the decisions coming from the Federal Reserve. Now, I was keen to talk to the NEC director because we had heard from President Trump during this big meeting of the tech execs that these chip tariffs in particular are going to be coming shortly. And when I asked the NEC director to give me some sort of timeline, I think we have the sound. Here's what he told me.
That 232 investigation has been moving forward. I think that there'll be something to bring to the president within a few weeks, maybe even sooner than that. And then the president will judge next steps.
Even sooner than that, than a few weeks. Of course, we've long heard from this administration that the Section 232 investigation was going to wrap up. It appears to be on a more expedited timeline. Normally, these take about 9 months, I believe. So we're approaching faster. But what's really interesting here, and it goes back to the top of our conversation, is who's going to get those carve-outs and those reprieves. And I asked Director Hassett where they stood in those conversations, and he said, of course, they're just working out the details. But then you have President Trump going out and seeming to reaffirm that those companies that onshore production are going to get some sort of reprieve, whether or not that's no tariffs at all or a lower, more preferential rate of tariffs, which of the chip supply chain this is going to apply to. Let's keep in mind, this is the entire supply chain when it comes to chips, the equipment that's used to make them, but also those downstream items.
Seems like everybody who was at that dinner last night gets carved out because they're all investing something or planning to in this country, right? So that works out pretty well, I guess. Haven't brought up the Fed more than interest rates in this case. How about the makeup of the Fed, Michael McKee? We had an important hearing for Stephen Myron yesterday, which we talked about. We're also waiting for a ruling on Lisa Cook. How different will this body look by the time we get to the next meeting?
That's a good question. I mean, the majority will be the same. We're talking about two different spots there, and it won't make a difference in what the ultimate vote is. Stephen Myron looks like he's on track for confirmation. one of the Republicans who might have opposed him, Tom Tillis, said yesterday he's going to vote for him, and the rest of the committee said we don't have a problem with the fact that there are problems with what he told us today. So he'll get through. It's just a question of working out the details of how they get the nomination to the floor, because they've got a lot of nominations backed up. The Lisa Cook question is interesting because it's taken long enough now that if she got a temporary restraining order, it would cover the period to the Fed meeting, because it's 14 days and we're 10 days out now. But after that, we don't know. If she doesn't get the restraining order, then she's going to be out of office. So we're all kind of just staring at our court screens.
That could be today, right?
That could be any time. The judge has all the paperwork in. And obviously the judge knows this is important in terms of timing because you've got this meeting coming up. So we'll find out. Then the question becomes, if she is removed, even temporarily, does the president try to fill that spot, even though she could be by a court reinstated later?
Right.
That would create a big fight.
And again, Tom Tillis says he won't have any part in that if it goes that way. So I don't know. We've got a lot to learn. You ready to jump if this breaks today?
I'll be here.
We'll be reporting on it. Michael McKee, I suspect, will be as well. Great to have you in town. We'll see you next hour for your conversation with Austin Goolsbee. There's a lot more to follow here on Balance of Power. I'm Joe Matthew in Washington. We turn to geopolitics next. What in the world is happening in the South Caribbean? We'll attack that next with Nick Wadhams on Bloomberg.
All right, let's listen to MSNBC.
Scroll less, learn more. Find your school district's plan at ny.gov/phone free.
GETTR is now for all teams. Even teams finalizing go-to-market plans for products that are anything but finalized.
It is time for Money Power Politics, and tonight this is serious. NBC News can confirm that the Justice Department has opened a criminal probe into Federal Reserve Governor Lisa Cook. The probe, which was first reported by the Wall Street Journal, centers upon whether Cook submitted fraudulent information on mortgage applications. Subpoenas have reportedly already been issued. Her attorney, Abby Lowell, responded to the probe today, accusing the Trump administration of, quote, scrambling to invent new justifications for its overreach with a new politicized investigation. For more, I want to bring in Peter Goodman, global economics correspondent for the New York Times, and Ron Insana, CNBC contributor and author of The Message of the Markets on Substacks. Peter, this probe dramatically raises the stakes, raises the risks here for Lisa Cook. What do you make of this?
Well, we don't know what she actually did, but this we know. We know that this is not a rigorous, dispassionate process. We know that a president who has vindictively gone after large law firms and has named in executive orders that he signs the people he's gone after for the reason that they worked for his enemies. This president who has himself run bankrupt companies, who stands accused of inventing billions of dollars on his own balance sheet so he can justify getting his hands on loans to bail out his own companies. This is the person who's driving this. The other thing we know is
Doesn't mean it's not scary.
He wants to take control of the Federal Reserve. I mean, that's what's going on here. He's told us that he wants to drive interest rates lower. He thinks that's going to give us a stock market boom. He thinks that's going to give us growth. It's a dangerous game because the independent Federal Reserve is the linchpin of the American system that for as long as we've been alive has been the great refuge for capitalism around the globe. And he's monkeying with that in the name of making money cheap.
I wonder if any of those tech leaders told him that truth tonight. I'm going to take a guess. No. All right, Ron. We actually saw the Federal Housing Finance Agency Director, Bill Pulte. He's the one leading the charge against Cook. He spoke about the allegations against her, where they came from, as much as he was willing to say on CNBC earlier this morning. I want to share a bit of it.
Can you speak directly to how this came about in terms of going and looking at her work?
Our agency discovered it, Andrew, independent of anyone else. As I said, we received the tip.
This tip came from where?
Well, you have to understand, of course, as part of a federal investigation, I'm not going to explain our sources and methods, where we get tips from.
Okay. Here's the thing. At the very same time, ProPublica is reporting tonight, Ron, that 3 different Trump cabinet members also call multiple homes their primary residence, which is exactly what Lisa Cook is accused of doing. All 3 have denied wrongdoing. The White House called this reporting a hit piece. What's your take, Ron?
We have entered the rules for thee but not for me arena here with Ken Paxton, also the Attorney General of Texas, having been named for doing the same thing over the course of the last many years. So again, it goes back to what was said earlier with respect to wanting to open up enough governorships on the board of the Federal Reserve that the president can name people who would be more favorably inclined to his desire to lower interest rates. The Federal Reserve, now known as the Department of Lower Interest Rates, is what the president is trying to create here in such a manner that he has said this publicly. He would like to see short-term interest rates of 1% from the current 4.25% to 4.5%. That would be throwing gasoline on an open fire with respect to financial markets and so on and so forth. So look, it's been said the president wants control of the Federal Reserve. He wants final say if he can get it. That's probably not going to happen, but that's what this is all about. It is simply removing the independence of the Federal Reserve, which, again, as stated, has been the cornerstone of the way in which our capitalist system works.
All right, well, let's talk about those governors, because Stephen Miron said today that he does not plan to resign from his current role as White House economic advisor if he gets confirmed on the Fed Board of Governors. Instead, he plans to just take an unpaid leave. Does that not raise a serious red flag?
I mean, this is not an administration that stops to contemplate conflicts of interest. They don't see conflicts between their interests.
You know what? You're right.
It seems pretty simple to the outsider. So hold on, you're for the independent Federal Reserve, but you're also for continuing to work for the president who says he wants to control the Federal Reserve and wants interest rates to be lowered and who's threatened to fire the Fed chair. How do these two things go together, only in this particular administration?
All right, Ron, new topic. Tomorrow, of course, we are getting the August jobs report. It is the first report since Trump fired the Bureau of Labor Statistics commissioner over the July data that he didn't like. What are we expecting? What industries are you watching? Are you going to trust the number?
Yeah, I'm going to trust the number because I don't think it.
Use Kayak's Explore tool to see just how far your budget can take you. Reykjavik? Spectacular. Then do what people do. Forget about Reykjavik for a while. 10 weirdest foods. Icelandic sheep's head jelly? Ugh. Oh yeah, Reykjavik. Back to Kayak for a great deal.
Optimize RX at the point of care. With reach to over 600,000 prescribers, 300 plus platforms, and direct integrations with the top EHRs, we put your brand directly into the clinical conversation, not just view it. Optimize RX at the point of care.
Yeah, I'm going to trust the number because I don't think there's been enough time for the BLS commissioner designee or nominee to have any influence over the data collection that took place a month ago. There's a week in every month in which the Bureau of Labor Statistics collects this data from corporations and from households. So yeah, I'm going to trust the number. Economists are looking for somewhere between 75 and 100,000 jobs created. Now, we've seen some softness throughout this week in labor market data. The job openings are now greater than the number of, I should say, there are more workers than there are job openings, so we put it in plain English. Jobless claims today reached a multi-week high, and we also saw ADP, which estimates how many private payroll jobs were created last month, came in at about 54,000, so it's a slow number. We also have another problem, Stephanie, as you well know. The labor force is actually shrinking. The pool of workers is shrinking, partly because of immigration, partly because AI is locking kids out of entry-level jobs and other disruptions that are taking place in business right now. And so this smaller number may become normal because it takes fewer workers to maintain the unemployment rate where it is. If the pool of labor is shrinking and the participation rate, those people involved in the labor market, it's also declining at the same time. So this is going to be really quirky stuff, and it's going to make it difficult, potentially anyway, for the Department of Lower Interest Rates to do more than just one cut in September.
Well, the president was actually asked about tomorrow's job report earlier this evening. Watch this.
A lot of people will be turning to you to see if you believe the data that's released. Can you commit to saying the data will be credible?
The number, I don't know, they come out tomorrow, but the real numbers that I'm talking about are going to be whatever it is, but will be in a year from now when these monstrous, huge, beautiful places, the palaces of genius, and when they start opening up, you're seeing, I think you'll see job numbers that are going to be absolutely incredible. Right now, it's a lot of construction numbers, but you're going to see job numbers like our country has never seen before.
What in the holy hell is a palace of genius? We just looked at manufacturing data this week, and manufacturing is going down in this country. What palaces of genius is he speaking of?
It's whatever headline can justify on this reality television presidency the narrative that's contrary to the data that we're having this manufacturing renaissance. But here's the incredible thing about this question over the BLS numbers. If Trump gets the numbers that he wants, having gotten rid of...
You're gonna bring her on back?
Well, here's the thing. Well, let's say the numbers are terrific. You know what the impact of that is? Less likelihood that we get the Fed cut that he wants later this month.
Oh my God.
So he's boxed in either way. So either the numbers are going to be gangbusters, then the markets are presumably going to sell because we won't get the cheap money that the president's promised us, or the numbers will be whatever they are, and we'll wonder, can we trust these numbers for the economy?
Let's just throw the box out the window and head to the palace of genius.
We've lost leverage. What we've lost is that India doesn't yet want to open their market, stop buying Russian oil, right? And stop being a part of BRICS, right? They're the vowel between Russia and China. If that's who you want to be, go be it. But either support the dollar, support the United States of America, support your biggest client, who's the American consumer, or I guess you're going to pay a 50% tariff. And let's see how long this lasts.
It seems like there's been a hardening of the line, both with President Trump as well as Modi, and a sense that there isn't really a coming together. In fact, that meeting with Xi Jinping and Vladimir Putin and Prime Minister Modi seemed to indicate a coalescing of the BRICS. Do you see anywhere in the next month, 2 months, any type of deal or backing down to a lower rate with India?
I would expect, like you saw it in Canada, right? Carney got elected with this term, elbows up, meaning let's fight with America. They put on retaliatory tariffs. They were all bravado. And what happened? Their GDP negative 1.6%, unemployment rocketing towards 8%. And what did Carney just do? He just finally dropped his retaliatory tariffs. So I think what happens is it's all bravado because you think it feels good to fight with the biggest clients in the world. But eventually, your businesses are going to say, you gotta stop this and go make a deal with America. So I think, yes, in a month or 2 months, I think India is gonna be at the table and they're gonna say they're sorry and they're going to try to make a deal with Donald Trump. And it will be on Donald Trump's desk how he wants to deal with Modi. And we leave that to him. That's why he's the president.
All right, Howard Lutnick on Bloomberg TV and radio on surveillance earlier today. This is the 5th of September. Remember, that's when he predicted that India would come back and say it's sorry, knowing that this administration doesn't always see a lot of sunlight, if any, between economic matters, trade, and matters of war and peace. Which brings us back to this truth post. We've lost India and Russia to deepest, darkest China. And Nick Wadhams is with us now. Runs our national security coverage here in Washington. Nick, it's great to have you as always. What does he mean by this? If only the economic ties that they're now exercising.
I have been trying to parse that social media post for quite some time this morning. I mean, it's extraordinary because for a long time the goal of the United States has been essentially to wean India away from Russia and widen fissures that it has with China. There's some tension there. But the president essentially seems to be admitting defeat in that social media post. So the question to me is, what is their strategy now? I mean, Howard Lutnick there, really fascinating comments suggesting that the U.S. is still very much in the game and they want to increase the economic pain on India and had it come back to the table. But, Prime Minister Modi has shown he is not really that interested in playing that game and takes a lot of umbrage at the idea that the US is going to squeeze him and that's just going to lead him scurrying back. So you have the economic issue there, but you also have this much bigger geopolitical issue where India says, listen, we don't want to be pushed around. Right now, all signs are toward India, China, Russia getting much closer together. Just have to see.
That includes military hardware as well as oil.
Well, I mean, India has long been a client of Russia's for military hardware. And in fact, this was a big priority for the Trump administration in the first term, and also the Biden administration, and also the Trump administration in the second term. I mean, early on when he met Modi, there was talk that maybe the U.S. would sell F-35s to India. But that certainly seems to be off the table right now. I mean, so it's very difficult to know what's actually going on here, but suffice to say, this thing is not headed the direction that the president wants it to be going.
Yeah, it doesn't feel like it. Nick, while you're here, I want to ask you about what's going on with Venezuela. We talked a couple of days ago about the U.S. blowing up what we called a drug smuggling, I won't even use the word ship, a boat, looked like a speedboat that we hit with a drone or a missile. There have been a lot of questions since then. I spoke with Senator Mark Warner last evening about it. Vice Chair of the Intel Committee says he got no heads up. There's no briefing on the Hill. And we saw some, I don't know if I can call it escalation last evening, but 2 armed Venezuelan F-16 fighter jets flew over an American ship stationed in the Caribbean there in what the Pentagon is calling a show of force.
Right.
How risky is this getting?
It's a great question because also some of our competitors are reporting today that the U.S. is going to move 10 F-35 jets to Puerto Rico, which is another element that we're trying to confirm. But I mean,
essentially declared war on Venezuela by way of a cartel. Is that fair to say?
Well, I mean, I think what you're seeing is this is an administration that has 2 cross currents in it. One is Marco Rubio and Trump really do, in a lot of ways, especially Marco Rubio, want Nicolas Maduro out of power. But you have the president saying, we're going to resist foreign entanglements, no new wars. He's the peace president. So the idea of a military attack to push Maduro from power seems like a remote possibility at this point. But you get into one of these situations where the U.S., it's a little like the India tariff situation, actually, where this administration really wants to flex its muscle, do things that it thinks will have a deterrent effect. The question is whether a wild card like Nicolas Maduro will be, make decisions according to the logic that the U.S. thinks he will. What Rubio wants is for the internal pressure to get so great that it will boot Maduro from power. But so far, with all of the sanctions, all of the punishments, designation as a foreign terrorist organization, you just haven't seen his grip on power get any weaker. So the question is going to be, well, what next?
Yeah, I mean, an American ship is sunk, a plane gets shot down. We're in a very different world, aren't we?
We are, but the other question, the thing that's a real challenge here is we just are not getting a lot of detail from the Pentagon. Normally if the U.S. would launch a missile strike at any boat and kill 11 people, you would expect a very detailed briefing. We're just not seeing that right now.
Then we'll bring that to you if it happens, Nick. Thank you so much. Nick Wadhams with a quick trip around the world here from Bloomberg's national security team here in Washington. We're going to stick with this story and talk about a report today in the New York Times that finds U.S. Navy SEALs were on the ground in North Korea in 2019. We're just hearing about it now. That's straight ahead, only on Bloomberg.
Please go to my store, the-studio-reykjavik.com, and get this stack to help build muscle. Myotrol is going to help with the gene expression to build muscle and to maintain muscle. Extremely important for males and females, especially if they're 40 years of age or older. This has polyphenols, lignans, and flavonoids to help with the gene expression to build muscle. Do resistance training, take the Myotrol. And to get added benefit from the Myotrol, stack it with the Gladiator Barley. You can take them separately, but it stacks really well together. Gladiator Barley will help to build muscle. This is a high density protein. This is a month's supply. You take it every day. It'll help to build the muscle, bring down inflammation. You'll recover quicker. It'll soak up free radicals through superoxide dismutase. and detoxify your body daily. So this is a great way to get healthy. Do some resistance training, take the gladiator barley and take the Myotrol. Now, it's important to do resistance training. And when you take supplements to help build muscle, especially when you're older, it doesn't mean that you're going to turn into a bodybuilder. That's not the point. The point is to build some muscle so you are able to have better skeletal structure, muscular structure, better posture. When you do these exercises and build muscle, you'll have better posture. You'll be able to control your A1C level, because when you have more muscle mass and you watch your diet, what happens is that you become more efficient in burning carbohydrates. So what is that? Become less insulin resistant. So you're controlling your A1C levels. It's a great way to get healthy. So please go to my store, the-studio-reykjavik.com, get the Myotrol, get the gladiator barley, do some resistance training, stack them together. Another great supplement that helps with NeuroStack is NAD+ and ubiquinol. Take them together. NAD+ will help to boost up your NAD+ levels, increase energy, help to repair DNA damage, and protect neurons. Super important to take, especially if you're 40 years of age or older. Ubiquinol is the most bioavailable form of CoQ10 that you can get. There's nothing better than what I have right here. So please go to my store and get ubiquinol so you can get the high quality CoQ10. Now with ubiquinol, what's going to happen is you're going to soak up free radicals, reduce stress in the cell, reduce oxidation, and it's going to help with the health of the mitochondria. So your mitochondria is going to produce more ATP. You're going to have more energy at the cellular level. That means the cell is going to perform better, especially the neurons. And ubiquinol will help to protect the neuron. And when you bring down stress of the neuron, you're maintaining the health of the myelin sheath. So take ubiquinol, take NAD+, stack them together as a neurostat. This also stacks well with C60, resveratrol, clarity factor. Please go to my store, the-studio-reykjavik.com, and also get the Myotrol and the gladiator barley. Use discount 5, you get $5 off any order. It's discount, uppercase, all uppercase, and the number 5. If you spend $100 or more, you get a free gift until supplies last.
It's 12:40 on Wall Street. We do trade markets all day long here at Bloomberg. Stocks are lower across the board. Jobs Friday. We got a sell-off number here. But down, the S&P is then all in the red. S&P down 36 right now. 64.65. Drop there of 0.6%. Strong evidence that the U.S. labor market is slowing is rippling through markets, driving stocks lower, bonds higher. All of them concerned that the Fed will now have to rush to prevent further weakness. The Dow down almost 300 points, down 0.6%. On NASDAQ is down 63, drop there of 0.3%. The Russell 2000 index of small cap shares is holding on to a gain of 0.1%. The 10-year 4.07%, with the 2-year right now 3.48%. Gold up $47 the ounce. Spot gold up 1.3%. West Texas Intermediate crude down 2.9%. And Bitcoin up 0.4% at 110,809 on Bitcoin. Alphabet's Google has been fined $3.5 billion by the EU in order to stop favoring its own advertising technology services. It is a move that risks further inflaming tensions with President Trump. Shares of Alphabet, they're up 0.9%. Treasury Secretary Scott Bessent is criticizing the Federal Reserve for what he calls mission creep and is calling for an independent review of the U.S. Central Bank. Bessent's remarks coming in an op-ed in the Wall Street Journal. Recapping, S&P right now down 31, drop there of 0.5%. Balance of power continues right now. Back we go to Washington once again. The host is Joe Matthew.
And that mission creep is tied into DEI policies that Lisa Cook is pushing on the board. Climate change and how it's affecting the poor, and policies of what the Federal Reserve should do in terms of helping disadvantaged sections of the population. Their mandate is job growth, stabilize jobs, and interest rates. Make sure that inflation is controlled. That's their job, not climate change, not DEI.
This is Venezuela we're talking about here, right? DOD, soon to be DOW. You heard about that, right? President said he's going to rename Department of Defense the Department of War in an executive order that he's going to be announcing a little bit later on today. A DOD, as of now, says the cartel running Venezuela, they put a statement on Twitter. The cartel running Venezuela is strongly advised not to pursue any further effort to obstruct, deter, or interfere with counter-narcotics and counter-terror operations carried out by the U.S. military. This, of course, follows our decision to blow up a boat. Looked kind of like a skiff. There were a couple of guys on it. They're bouncing through the water in the middle of the night in the Caribbean, and we blew it up, said that it was a drug cartel smuggling drugs at high speed to the United States. There are now questions, however, about this decision and whether it was in fact a legal move. As the New York Times reports today, the trafficking of an illegal consumer product is not a capital offense, and Congress has not authorized armed conflict against cartels. Marco Rubio, though, says more is coming. Talked about this just yesterday, saying the U.S. will work with other countries to, quote, blow up more drug cartel operations. We've been showing you video of this boat, the thing on fire, and it's gone.
See how Trump? See how Bloomberg sets this thing up? Trump's bad. Heaven forbid that you blow up people that are actually killing Americans. Heaven forbid you stop the drugs coming over the border. Heaven forbid that you actually make the society safer. Orange man bad all the time. I am so sick and tired of these fucking liberals.
To be counter to the law. If we are not, as congressional oversight, not going to get the ability to do oversight and get the briefings because people are afraid of being called out by Laura Loomer or the administration doesn't want to share information, then we are in a place that's frankly unprecedented. If you got to go through a Laura Loomer litmus test.
What about Congress getting their shit together for the last 40 years and making sure that our borders were safe? And that there wasn't all this drug running that was going on. And oh, by the way, how it was funding the Iran-Contra fiasco, how it funds black operations for the CIA. I mean, look at this crap. It was Congress that let this happen.
A visiting fellow at Harvard Kennedy School's Ash Center, our Democratic analyst. Rick, I don't know if this was legal. Was it the right thing to do for the U.S. and should we be promising more? That's what Marco Rubio says. Knowing that members of the Intel Committee in the Senate haven't even been told about this. What's going on here?
Well, I do think that we have ignored these various threats from our southern border.
Yeah, no shit, Sherlock.
Alive in the Caribbean and South Central America for too long and repeatedly
ignored at the executive branch and the legislative branch. Now you have someone that actually wants to do something about it, and Congress says, that may have been an illegal action. You blew them up in international waters. Trump, you're a bad guy.
Organizations as foreign terrorist organizations. And I do think that's the rationale this administration is using, is that they're not attacking what they perceive as cartels or drug organizations. They feel like they are fighting a war on terror. And that then brings in the Patriot Act and other bodies of law that governs their conduct and what they can and can't do. So we see this repeatedly with this administration, including, by the way, Mexican cartels. And it would not be surprising to me that this is their legal rationale. And we should not underestimate the focus that this administration has on going to war with these terrorist organizations.
Yep. Well, that's for sure. It would be more standard procedure, I believe, Jeannie, to board that vessel, though, right? We have the ability to board a vessel, to take people captive, to search the boat and see if what we believe is on board. They just killed everybody. Was it the right thing to do?
Yep.
Yeah, Joe, you're so backwards looking. That's what we used to do. Stop the boat, board it, see what's on there. Now we just blow it out of the water in international waters. Boat up.
If you played patty cake with the cartels in South America, do you think that you're going to be able to control the situation, or do you think it's going to get out of control? If you don't show force, they will continue doing the drug running. They'll continue to do the drug running already. I want us to invade the country and destroy it. You know, but people that, you know, that talk, they just talk about Trump all the time on Bloomberg. There's nothing that he can do that's right. Nothing. Even blown away drug runners in international waters. Too bad.
And no evidence, no authorization of the use of force by Congress. This is an act of war against Venezuela that has not been declared.
So what? They're killing our citizens. They're coming to our country and killing our citizens and profiting from it. We need to destroy them. There is nothing wrong with that. And anyone that wants to dance around with the legality of this, well, what's going to happen is that they'll just play with loopholes and keep on doing it, and more people will die. I'm glad that Trump blew them away in international waters, but I think he needs to go further. He should start, you know, we spent all this money on SEAL Team 6 and SEAL Team 2 and SEAL Team whatever. You know what it is? It's about time to actually, you know, get our investment back and start destroying people and organizations and countries that are harming us. No, we can't do that. We need to use the Coast Guard and board the vessel and confiscate and put them in handcuffs. You think that's going to stop it? No, you just blow them away. No, Trump should just declare war on Venezuela.
These organizations that act as terrorist organizations coming across our borders, spreading poison into our world, and by the way, and attacking our citizens, right? I mean, so we have as a nation condoned this kind of strike capability in every administration since the 1970s. We have drones over regions of the world today killing terrorists without all this publicity associated with the attack in the Caribbean. And these are designated individuals who once identified are sent to their maker. So yeah, sure, this requires more investigation. There should be procedures that are followed. But this is also in keeping with the Trump administration. We're going to send a message. We're going to do something that will get an enormous amount of attention, and hopefully that will actually decrease the amount of illegal activity, coming across our borders in the South.
Well, I'd be very curious to hear you both weigh in on this New York Times story about another mission that the Senate, Congress was not briefed on. We're just learning about it now. If you saw this in a movie, guys, you would think that it was so far-fetched that it was funny. A group of Navy SEALs were actually on the ground in a super secret mission in North Korea back in 2019, the first Trump term. A group of SEALs, as I read from the Times, emerged from the ink black ocean on a winter night in early 2019, crept to a rocky shore in North Korea on a top secret mission so complex and consequential that everything had to go exactly right. It did not go exactly right. We brought the SEALs to North Korea in a nuclear submarine. They branched out in mini subs, actually got on the ground and realized, not knowing what it was, that there was a vessel nearby that they did not anticipate running into. North Korean boat appeared out of the dark. Flashlights from the bow swept over the water. Fearing they had been spotted, the SEALs opened fire. Within seconds, everyone on the North Korean boat was dead. The SEALs retreated into the sea without planting the listening device they had gone there to put in place. This is while talks were underway with North Korea. Jeannie, should there be an investigation here? What do we do with this information? Should the Times have published this?
Yeah, Joe, you had me on edge there. I feel like I'm listening to I love crime podcasts, so that's what I feel like I'm listening to while you're going on. It was a really good reading. You know, I do think the Times should obviously check with the government, and they do, to try to get a response. And then I do think they have a duty to publish. And I do think we should have congressional oversight and an investigation into this. It is quite a story to read. And, you know, we've seen this in the past. There can be justifications for these kinds of things, but certainly it all comes back to congressional oversight. And when you look at what is happening today, as we think about Venezuela, I don't think we should underestimate the role that Congress must play. I mean, your interview with Warner.
The problem is that Congress doesn't do anything.
That declare war. They are the ones that authorize the use of military force. And in the case of North Korea, they're the ones that
So the implicitness of implicitly she's saying that if Congress is not willing to do anything for the last 40 years, then maybe they're on the side of the terrorists.
Years ago.
Yeah, look, I think within reason, communication with the appropriate committees and staff, is part of the dance with the executive branch and the legislature. So absolutely, either before, during, or after those events, especially the intensely secret ones like the one you described in North Korea, not so secret when you blow a boat out of the Caribbean, deserve some kind of conversation. And again, I put the onus a little bit on Congress. I mean, they routinely pass budgets. They routinely confirm individuals. If they want to send a message to the administration, don't beat up on Laura Loomer. Stop something from happening, get their attention, and work out a deal. There are ways that Congress can work with this administration and previous administrations. This was certainly not this didn't happen in North Korea during this administration, but the reality is it can all be worked out.
Rick Davis and Jeannie Shanzano, great conversation, and they will be back in our second hour of Balance of Power. We're going to bring you a conversation with the chairman of the Ways and Means Committee coming up.
Well, how many thousands of people monthly die from it because of inaction by Congress per day? How many people die per day? Think about that. And then extrapolate that out for 40 years. Inaction. It's not Trump. That's not the issue here. The issue is inaction by Congress, not getting the job done because they wanted it to come in. They wanted the social unrest. They wanted the decline of these cities. All right, let's listen into Let's listen into the BBC about the UK and Ukraine war.
The scavenger hunt.
For his first interview since leaving office, Admiral Sir David Radican, welcome to Political Thinking.
Well, thank you, Nick. Delighted to be here.
I wonder what impression those images from Beijing had on you. As you saw that new weaponry, as you saw that cast list of the world's autocrats, were you alarmed? Were you impressed? Were you scared?
I think maybe there's two or three things. So one, you're right, it's reflective of an era that we're stepping into, one where geoeconomic competition has come to an end and it's much more geopolitical. It's about state on state and the risk of state on state competition and the risk that that becomes violent. That's true. The other one is maybe a skepticism. It's a military parade. It's very impressive at one level, but for nations to come together and to be prepared to fight together and to support each other, it's much more substantial than a big parade.
They're not the alternative NATO.
They are not. These are not countries that have a history together, that have a mutual trust, that actually will support each other when it comes to war fighting. And you've seen that. You've seen that nobody came to Iran's aid when it was attacked by Israel and America. You know, these countries don't go rushing to help each other out, and we should recognize what's going on. We should be really confident about who we are and who our partnership and allies are.
You're already illustrating what many people say of your friends and your critics, which is you're an optimist. And we'll come on to why you're an optimist about the war in Ukraine in a second. But I want to take you back to it beginning, that war that has defined your time as head of the armed forces in Britain. You had conversations with your Russian counterparts just before the invasion, not long after you became chief of the defence staff. Did you look them in the eye? Did you ask them, are you going to do this?
Absolutely. So I accompanied Ben Wallace to Moscow. I think it was about 10 days before the invasion. We've got superb intelligence agencies. We were really clear that Russia was preparing to invade Ukraine.
Ben was Boris Johnson's defence secretary.
He was the defence secretary at the time. So we went there for Ben Wallace to have a meeting with his opposite number, the Russian defence minister Shoigu, and I met with General Gerasimov. We've always said we won't go into the details of those conversations, but we were really clear in saying to Russia that we knew that they had plans to invade Ukraine, and we were also clear in telling them that it would be a disaster. General Gerasimov was really clear in the very Russian way, we have no plans to invade Ukraine. And that was nonsense. And I think the Russian tradition, I think there's a word, vernaya, or something like that, which is a kind of white lie. I asked a question, I know that you're going to lie back to me. We have this conversation, we both know that there's a lie at the heart of this conversation. That was what it felt like.
And I was interested in your valedictory speech in this job. You praised by name. I mean, I would expect you to say, oh, all the people I've served with, thank you very much. But you praised by name Boris Johnson, who was Prime Minister at the time of the invasion. Ben Wallace, yes, but also the Foreign Secretary at the time, Liz Truss. Why did you want to praise them? Why were they worthy of that praise?
I think when the invasion came, they were really clear in terms of that political moment, how was the UK going to respond? So were we going to do another Crimea and look the other way, or were we actually going to respond and support Ukraine? It's almost like a political tsunami. You've given your advice, you've reflected on what the intelligence says, what might happen militarily and so on. But it's fundamentally a political moment and one of political leadership. And then that's supported by both the establishment, but especially the Prime Minister, then getting on the phone to European leaders. And what you saw on the 24th of February was the speed of response, which was not a response
in the way that we've seen with Crimea. It was this fresh response of the West saying, we are going to support Ukraine.
And pretty much most of your career in the armed forces has seen the armed forces in retreat, having to constantly make a case for themselves as to why we shouldn't just claim a defence dividend, cash in and say, thanks very much, peace in our time.
Yes. So, as well as making me feel really old, Neil, you're also reflecting what I think is a big moment, a turning point. So I'm definitely of that era of seeing the very end of the Cold War, then this period of a peace dividend, and what I think is much more significant than people have fully realized in terms of the turning point that we're now in. So the peace dividend is over. The Prime Minister, Keir Starmer, talks about we now have the new defence dividend. The decision about whether or not we should be spending more money on defence has to be a prime ministerial one. And it has to be decided and focused based on an assessment about the country's security. And you can't always make that clear to the public. And I think there's a dilemma. So part of my job
can't make what clear.
Can't you do? So I think the dilemma is, I'm the Chief of Defence, you've got this responsibility to keep the country safe. And we are safe. The UK is safe because we're a nuclear power, we're in NATO, we're in the biggest and strongest gun club ever. And our principal ally is America, the strongest nation on the planet. We're safe for now.
70% of e-commerce ad spend goes to catalog ads, but most marketers don't even know what they are. MarPipe gives brands full control over what their catalog ads look like and how they perform. Discover how you can take control of it.
We're safe for now and for the next few years. But if you look ahead into the 2030s, this competition is getting more fierce. Russia is dangerous, and we have to strengthen, collectively. This war has been a disaster for Russia. Putin wanted less NATO, he's got more NATO. We've grown from 30 nations to 32 nations. Putin originally thought that he would subjugate Ukraine in days, if not weeks. That's clearly not the case. It's a facile description, but it's a really important one. If a snail had left Rostov-on-Don in Russia on the 24th of February 2022, by now it would have crossed all the way through Ukraine and it will be halfway through Poland. That's how difficult Russia is finding it just to get those 4 oblasts. If Russia carries on at the pace that it currently is, it will take it 4.4 years to get the remaining territory in those 4 oblasts. And having lost 1 million people killed and wounded, it will lose a further 2 million people killed and wounded.
You are now retiring from that job, although not, of course, retiring per se. It's going to be very hard to give up that sort of insight, that sort of contact.
I go back to, I think it was Roosevelt, the privilege is having been in the arena. And it's the same when you're in command. In these roles, you stand on the shoulders of giants. The men and women that serve our country, whether in uniform or civil servants, and temporarily you're allowed to stand on their shoulders. And that these people have got your back, have got the nation's back. And that's the big reflection.
Admiral Sir Tony Radical, thank you very much for joining me on Political Thinking.
Thank you very much.
If you've enjoyed this,
from one commissioner or another. So if Trump does fire the BLS commissioner, he won't get the upper divisions either.
There you go.
In a 50,000, even in the best case scenario, still doesn't sound like a strong labor market. I'm going to repeat Joe's question. Even in the best case scenario with those divisions, is this the Trump economy?
Well, and the unemployment rate increase, right? I think that's where the real signal is, because it's the relative labor demand and supply. And what we saw in the unemployment rate is that participation rate increased. So even though employment in the household survey actually increased over 200,000, the unemployment rate still ticked up because in fact, people are coming back into the labor force after dropping out in the past 3 months. I do think that the bottom of this labor market was actually in June, and we actually have been through the really rough patch already. In fact, after all the revisions are done, we probably have a couple negative prints a couple months ago. We also probably have a negative print late last year, but I think things should be rebounding right now.
Well, that's fascinating because we hear so much about the huge levels of investment that are coming from some of the.
Finally, an analyst that's actually on Bloomberg that is saying the same thing that Trump is saying.
So we are indeed estimating that the investment from AI will be continuing on this linear trajectory or even slightly non-linear in the next 2 years. So that helps with GDP growth, right? On the other hand, we are seeing rising unemployment rate in sectors that are exposed to AI, possibly because employers are not hiring as fast. And this is what we're seeing in the demographics group from age 20 to 24, that their unemployment rate is close to 10% right now. So I think through the reduced hiring, not outright layoff, this is where ultimately through natural attrition and not replacing those workers, you're going to see slow build up, acceleration in productivity.
Really interesting conversation as always with Anna Wong. Thank you, Anna, for your great analysis. And you can find
it's the younger generation that's going to have a problem.
Online at Bloomberg.com as we add the voice of Congressman Jason Smith, the Republican chairman of the House Ways and Means Committee, is with us right now live from Capitol Hill on Bloomberg TV and radio. Mr. Chairman, thank you for joining us. It's great to have you back with us here on Balance of Power. I'd love your take before we get to matters of legislation, just on the jobs print today, what it means for our economy now that the commission of BLS has been fired. Do you believe these numbers are credible?
You know, I believe that I would agree with actually the person before me. I believe the numbers should be a little bit higher than what was released today. But let's look at it just this year. In the first 8 months of the Trump administration, there's been 500,000 new jobs, and those are American jobs. Those aren't government jobs. That's real jobs, and I think it's going to have a huge impact. But as the president said in one of the prior messages that I've heard, when you look at a year from now, when the growth aspects take an effect from the passage of the tax bill on July 4th, you're going to see a lot of new jobs.
Chairman Smith, the economist that was speaking before you, Anna Wong, also said, though, that some of the negative prints that have come up in the last couple of months are likely to still be negative. Those revisions still stand. If that weakness persists, is that indicative of the effect of Donald Trump's tariff policy?
I don't believe so. And I think she also said that June was probably going to be the lowest level, and then it should only go up from that point on. But just passage of the big, beautiful bill of the small business deduction, the National Federation of Independent Businesses claim that tax certainty will create 1 million new jobs each year for the next 10 years. That's pretty substantial, and that's just one provision within the tax bill, and that was from the NFIB.
Well, it's interesting that you bring that up, Mr. Chairman, because there's been a lot of writing recently about the branding, the messaging around the bill. The president himself said he doesn't want to call it Big Beautiful Bill anymore. I think the White House is looking more for something like the Working Families Tax Act or the Tax Cut Act. And I'm wondering your thought on that, having just come back from August recess, the messaging and the communication with voters that needs to follow such a massive piece of legislation passing. It's basically an opportunity to educate people on what you just did. Does it need a new brand? Does it need a new look while you take this on the road?
What it needs is for people to know what's in the bill. And that's what we have to do a better job at. We have to show how this is a tax cut for working families, such as no tax on tips, no tax on overtime, increasing the standard deduction, which is what the majority of working class families use, increasing the child tax credit to $2,200, creating the Trump accounts for new children that are born, that $1,000 will be invested for them. These different provisions, whether it's increasing a tax incentive for paid family leave or childcare, these are items that need to be discussed rather than just one big broad brush. The bill, as you know, had 103 different tax provisions, which we passed through the House Ways and Means Committee, but it also had border security, it had military spending, it had welfare reform. So it was a variety of things. But just from a tax perspective, of course, these tax cuts, the majority affect working families.
Well, I have to ask you not about only what's just been done, but what's coming up next. Mr. Chairman, there's talk of another rescissions package, for instance, because after the last one, we had a lot of Democrats come on the air here to say that they can't trust deals that are made surrounding appropriations in the House. And we may well end up seeing government shutdown. One more rescissions package, and we shut down, is what I believe Brendan Boyle said, the top Democrat on the Budget Committee. So give us your read on this. You're talking to your colleagues. Are we at risk of shutting down after September 30th?
You know, I really hate to hear that my Democrat colleague says no rescissions at all. That's saying that everything that's appropriated was needed to be spent. I don't think that's the case when you're looking at trillions of dollars. I'm sure you can find some things that aren't being spent and we should rescind it. I am very disheartened what I've been hearing from the other side of the building, from the Senate, from Leader Schumer, from Chuck Schumer, by saying that there's going to be a shutdown. We can pass a funding bill out of the House of Representatives, and we will pass a funding bill. The issue is you have to have 60 votes in the United States Senate. There's only 52 Republicans, so that means at least 8 Democrats are going to have to join in. But if they refuse to join in, there will be a government shutdown.
Chairman Smith, it sounds like you're saying that a continuing resolution may be the only option here. How long could that last if that's the way that it moves forward?
I would expect that there'll be a continuing resolution for at least a couple months, because there is clearly no bipartisan agreement on an overall appropriations process. And so a continuing resolution is what you're going to be looking at over the next several weeks. The question is, will the Democrats in the Senate support a continuing resolution? They're saying right now that they won't, but if they don't, they are clearly shutting down government.
Well, it's interesting. We're hearing talk now from the White House, not the first time, of a full year CR, a year-long CR that would bring us all the way to the next fiscal year. Mr. Chairman, does that give you the sweats when you hear that, or could that really happen?
You know, I would really like for us to do our job and to appropriate. Getting tired of CRs, but that requires Republicans and Democrats to work together through this appropriation process, and hopefully people will be able to do that. But it's a huge challenge. It's a huge challenge. I think right now, if you were going to ask me to predict, it's going to be a CR at least for a couple months.
Well, Chairman Smith, you're talking about getting the Democrats on your side. Would you commit to more rescission packages to do that?
Well, the Democrats don't want rescission packages, as what was said earlier. I'm all about making sure you're appropriating money and you're cutting waste, fraud, and abuse, making sure that you're funding the things that should be cutting. So there's times that there needs to be rescissions. There's times that items shouldn't be rescinded. But to say a blanket across the board, no rescissions, that's not how it works up here.
We understand your position on that, Mr. Chairman. I'd love to know where you stand on Obamacare tax credits. We've got a big set of expirations, is the word I'm looking for, coming up at the end of the year. And there are questions about whether you could actually make a deal with Democrats by extending them. There are also concerns, as they call it, the Obamacare cliff at this point, about what it would mean for Republicans if they expired. Should these be renewed?
I think you look at everything when it comes to such a divided Congress is on the table, and there's a lot of negotiations throughout the whole process. I have concerns with the premium tax credits that you're referring to. The fact that if you make $600,000 in Scottsdale, Arizona, you get subsidized for your health care. That's not appropriate. And so those kind of reforms have to be maintained if there's any step moving forward on extending those credits.
Mm-hmm.
Chairman Smith, can you talk to us a little bit about some of the talk we're hearing around a second reconciliation bill come October 1st? Is that a possibility?
You know, I've said all along that we needed to have one reconciliation bill, one big, beautiful bill, because if you look at history, there has not been a case in the history of the United States where two partisan reconciliation bills passed in the same year. That's never happened. And with these razor-thin majorities, I think it's going to be very difficult. So I'm glad that we were able to usher through the one big beautiful bill. We delivered the largest tax cut in US history, the largest investment in border security in US history, the most significant welfare reforms in US history, just to name a few things. The second reconciliation bill, I think it'll be a whole lot more difficult to move through the system.
Well, I can only imagine going through that exercise once again, even though you can, doesn't mean you should. Jason Smith, it's great to have you back, Mr. Chairman. Thanks for joining us. He chairs the Ways and Means Committee in the Republican-led House, with us live from Capitol Hill here on Bloomberg TV and radio. They're going to head back home, Preeti, and come back next week to some pretty interesting challenges. As you mentioned, we're down to a dozen legislative days to figure this all out.
Absolutely. And the clock is ticking. It's still unclear if there's any way out of this.
That's true, as we just proved, I think, in another conversation.
Please go to my store, the-studio-reykjavik.com, and get the C60. C60 is a very potent antioxidant. You can get it in avocado oil, extra virgin olive oil, or MCT coconut oil. You can get it in a 2-ounce, a 4-ounce, or an 8-ounce configuration. C60 is going to soak up free radicals, help the health of your mitochondria, boost up your ATP. You're going to notice your immune system is better, your endocrine system is better, your glands are better, even your neurons, your cardiovascular system. Why? Because by soaking up free radicals at the cellular level, cells will perform better. At the neuron level, it's going to produce more neurotransmitters and the neuron is healthier. And at the vascular level, you're reducing oxidized LDL. And when you reduce the concentrations of oxidized LDL, you're reducing plaque formation. C60 is a cornerstone for slowing down the aging process. Extremely important to take. Take a teaspoon a day, every day. I've been taking C60 since 2016. Take it every day, teaspoon a day. You can get it in a 2-ounce, a 4-ounce, or an 8-ounce configuration. But it's very important to take every day. Bring down those free radicals. Heirloom barley helps to detoxify your body, bring down inflammation, and soak up free radicals by superoxide dismutase. You can take it with the C60 by soaking up free radicals different ways. It improves the anti-aging synergy. Also, detoxifying your body is super important to get healthy. And Boomer Boost. Boomer Boost has 68 nutrients. It has a very comprehensive compound profile shown on the screen here. You can read the label on my website. And this will target multiple systems. It'll target brain function, heart, vascular system, musculature, increase your energy levels, rev up your metabolism, slowing down the aging process. Super important to take every day. And this also will help you to lose weight if you want to lose weight. For the ones that want to lose weight, by taking Boomer Boost, what you do is that you mix it with soft foods like hummus or yogurt or maybe even applesauce. You do that for breakfast or for lunch, not both. And then have a balanced meal for the other 2 meals of your day. You want to restrict your calorie intake and this will provide you with all the energy you need. So there's no spiking of energy. You're going to have a steady flow of energy throughout the whole day. And by working out, especially resistance training, by working out and building more muscle, you're going to be burning more calories. And you're going to be controlling your A1C levels. And over time, on average, you're going to lose about 2 pounds a week. You do that until you get to your target weight. And then you start eating a proper diet, right? Healthy diet, without the calorie restriction to maintain the weight. Now, it's really important. It's not just supplementation. It's also lifestyle change. That means filtering your water, detoxifying your body, making sure you stay away from sugary substances and also processed foods. Eat a balanced meal, meats, fish, vegetables. I don't subscribe to the idea that it should be a vegetarian diet, right? Or just a Mediterranean diet. I think that just a balanced meal that's healthy, that you cook, not something that you purchase in a can or anything like that. And moderation in terms of calories. Learn new things, do cardio, do resistance training, do balancing and stretching exercises. But for the ones that are trying to lose weight, do more resistance training. Out of the 4 modalities of exercise, more resistance training to get the muscle that you need to burn energy, all right? Now, once you get to your target weight, then you've already kind of started this process of improving your lifestyle. So it's easier to maintain the weight loss. Again, this targets many systems. Help to control that A1C level, and you're gonna have that steady burn of energy. You're gonna think more clearly. You'll be able to sleep better. You'll have positive neuroplasticity. You'll have, over time, better memory. So when you are fueling your body properly, and you're changing your lifestyle and looking at it from a holistic point of view, with the proper supplementation, the proper stacking, you're going to be healthy. So please go to my store, the-studio-reykjavik.com, and get the Boomer Boost. And like I said, you can stack it with Gladiator barley or the heirloom barley together to get the max benefits.
Donnie, who probably got quite a kick out of this story, he was asked about it earlier this week in New York. Listen.
Today's news that the White House is considering job offers for Eric Adams and Curtis Sliwa. It is not news that carries meaning because of any impact it will have on this race. We feel just as confident as we did yesterday that we will win this race in November. This is, however, about an affront to our democracy. An affront to what makes so many of us proud to be Americans, that we choose our own leaders.
It's interesting, Creedy, because Donald Trump doesn't appear to be backing down from these reports. And he actually talked about this when he was asked. He's maybe looking for a job for Eric Adams at Housing and Urban Development, maybe in Saudi Arabia. Did you see this report?
I mean, the New York Times talking about potential ambassadorship.
Yeah.
Has Eric Adams been to Saudi Arabia?
I don't know. They talk about Turkey a lot, but let's hear from Donald Trump. He actually got into this just last evening when he was at the table with the tech titans. Here's what the president said.
Are you urging or encouraging any candidates in the New York City mayor's race to drop out to clear the field?
No, I don't like to see a communist become mayor, I will tell you that. And I don't think you can win unless you have one-on-one, because somehow he's gotten a little bit of a lead. I have no idea how that happened, but I'd prefer not to have a communist mayor of New York City. And, you know, that's what he is based on his policy. If you look at his statements in the past. So I would like to see 2 people drop out and have it be one-on-one. And I think that's a race that could be won.
I agree. Generating a flurry of headlines. Trump wants two-way race for New York City mayor. Adams considering dropping out of race after secret meeting in Florida. Talks between Adams and Trump advisors center on Saudi ambassadorship. Apparently, Eric Adams will be in town next week now, according to the New York Post, is going to sit down with Steve Witkoff to talk about next steps. Got to play this to the panel. Rick Davis and G.D. Shanzano are with us now, Bloomberg Politics contributors. Jeannie is in New York as we speak, democracy visiting fellow at Harvard Kennedy School's Ash Center. Rick Davis, partner at Stone Court Capital, our Republican strategist. As the Democrat on the panel here, Jeannie, I don't know your thoughts of Donald Trump removing the Republican candidate from this race, but where is this going? Will the president of the United States dictate the next mayor of New York?
That is what Mamdani says he is trying to do. You know, and it is stunning. I will tell you, the local media here had something of a mini field day because the mayor was supposed to have a press conference that got canceled. Not that there was any direct tie between this, but of course, every little move he makes now is watched.
I thought she was working at Iona College, Iona University. Now she's Harvard Kennedy School Ash Center, democracy visiting fellow. What? Another fucking liberal at Harvard.
Trump saying, no, we want him out, which is quite stunning. And I thought it was interesting that Donald Trump has now recategorized him. He is no longer a democratic socialist. He is now a communist. But I guess we can't let little semantics get in the way.
Rick, weigh in here and maybe explore the hypothetical with us if you can. If this does ultimately become a one-on-one race with Andrew Cuomo versus Zohran Mamdani, does Andrew Cuomo have a shot here?
Well, you know, assuming that
if everyone leaves
and Adams have
this guy is an idiot, and this guy is an idiot, and his dog gets bored and just sleeps on the couch over there or in the chair. Rick Davis, Stone Court Capital LP, dipshit. As long as you get the other candidates off of the ticket, and it's just Mamdani and Cuomo has a high probability of winning. But if you have Adams or Silvio on the ticket, in addition to Cuomo, it's going to be a split ticket, and Mamdani is going to win.
And this is going to take some time to sort of play its way out as far as getting these folks out, and a lot of attention on Adams and this offer potentially to become an ambassador or something like that.
Yeah.
But we're not hearing much about Sliwa, who's got more support than Adams.
If Adams went to Saudi Arabia or some of the Middle Eastern countries that have a lot of money and a lot of connection with Trump, Adams probably just made himself with connections to become a multi-millionaire. All right. So he's probably going to drop out. He's probably going to go to the Middle East. He's probably just going to be that ambassador, get those connections, get out of government and start some sort of business venture. And, leave government in 2028, 2029. Probably late 2028. It would be the best move for him. This is a guarantee of success. Guarantee. He'll be way more successful than anything that he would do as mayor for New York. So of course he's going to take it.
He's Floridian now, but his entire life has been defined by New York, and I do think there is an aspect to that is, all his friends, a lot of the people sitting around at dinner last night, have homes in New York. They don't want to see a socialist, as Jeannie puts it, put in as mayor. And so, yeah, we're going to have a time of our life if he becomes mayor, and we can talk about this leftist surge inside the Democratic Party, and it'll be very hard for Democrats to run away from their largest city mayor in the country. But at the end of the day, it's bad for New York City. Donald Trump knows that. So I think a lot of what's motivating him is to do no harm to New York City, his assets, his businesses, his friends' businesses. I mean, it could be having a dramatic effect on his opinion about what to do about this race.
Jeannie, weigh in here. Again, explore the hypothetical with me. If Eric Adams is no longer in the race and he is being considered for many roles within the cabinet, whether it's at HUD or whether it's at in Saudi Arabia, would Eric Adams make a good ambassador? What do you think?
Yes.
Well, he hasn't made a very good mayor, so maybe it would be a better job for him than the mayoralty. He was subject not long ago to public corruption charges that Donald Trump's DOJ pulled back on, and those were dropped. So this is somebody with a record. This is somebody who has had, a lot of serious charges brought against him. By the way, Andrew Cuomo as well. Certainly neither of them found guilty or anything like that, although Governor Cuomo did, leave his very important post as a result. I would say a lot of this is being driven by polls, which show that if it's a two-way race, Andrew Cuomo certainly can be competitive with, even one poll showing him beating Mamdani. That said, he lost to Mamdani in the primary by double digits. I would also say there is a very serious.
But during the primary, you didn't have a good swath of individuals voting from New York City. It was only a subset, and a lot of them were young. So when it's the real deal, it's the real election, more people are going to show up. And the question is how many of them are Democrat socialists or socialistic Democrats, or whatever the hell they call themselves.
Is paid for by the top 2%. Imagine what that would do to New York City if those people flee, and flee they might. So there's a very real, serious economic repercussions to all of this, depending on if he does win, and he certainly could win if things stay as they are now.
Well, President Trump is not only weighing in on the New York mayoral race, he's weighing in on what will be a barn burner of a congressional race now that Jerry Nadler has decided to not run for re-election. And he's on Truth Social about this too, Rick Davis. The president writes, I'll be careful here, but this is the president. Jerry Nadler, one of the most disgusting congressmen in USA history, is at long last calling it quits. He's finally leaving Congress. I've been beating this bum, he says, for 40 years. First as a New York City developer where he opposed me for no reason at every corner, but could never stop me from getting the job done. He goes on to talk about then running against him as president, where this psychopathic nut job together with crazy Nancy Pelosi impeached me twice and lost. I could keep going. If you're with us on Bloomberg TV, you see it's a pretty long post here. Rick, we've got less than a minute. Will Donald Trump be stumping in New York for these two races?
He may stump if there's a decent Republican in the Nadler district, which may be irrelevant because it's a pretty Democratic district. And you can tell, Nadler should be very happy that he's had such a big impact on the psyche of Donald Trump. That's pretty impressive.
He calls him a lightweight in the same post. I don't know. We got to pick one. Rick, thank you. Jeannie, thank you. Bloomberg Politics contributors Rick Davis and Jeannie Shanzena. We always learn something with these two. An important conversation ahead with Austin Goolsbee, only here on Bloomberg TV and radio.
Please go to my store, the-studio-reykjavik.com, and get the nattokinase. Nattokinase is fibrinolytic. It's going to break up clots and help to control your lipid profile, help to bring down LDL levels and increase your HDL levels. When you have a better lipid profile, you're reducing the chance of plaque formation. Vitamin D3, super important to be able to absorb calcium, but also they'll help to get cells to go into apoptosis if they're infected. You should be getting vitamin D3 from my store right now. Why? For the fall and the winter. You're going to need it. And vitamin D3 will help with bone density and cardiovascular health. Very important to take. Now, the best way to build bone density is to take the D3 take the K2, vitamin K2, MK7 molecule, and do resistance training. And when you do that, you're going to build better bone density. But not just that. Over time, you're going to also notice that joint health will improve, especially if you're taking the collagen and the turmeric together and taking the magnesium to increase the efficacy of vitamin D3. Now, for cardiovascular health, vitamin D3 and vitamin K2 will help to reduce calcium depositing around plaque formation and, over time, slowly pull out some of the deposit that's already there. So it's a dual purpose stack. D3 and K2 together, when you do resistance training, will help build bone density. But it will also help your cardiovascular health. Super important. So you can stack it also with the nattokinase for added benefit for the cardiovascular stack. So please go to my store, the-studio-reykjavik.com, and get the great supplements I have. And again, like I said, get prepared for the fall and the winter. You're going to need it. Something's coming. Be prepared. D3. So that's the show. The big takeaway for today has been the jobs data. Unemployment rate did tick up a little bit to 4.3%. It has increased the chances of the Federal Reserve lowering rates this month. When the news came out, there was a rally for the S&P 500, but around, I want to say around 11 o'clock, 11:30, it started to mean revert back down below the 6,500 level. So it's near the end of the week. It's Friday, so people are holding off to see what happens over the weekend. Anything can happen. Tariffs, Trump's tweets. I mean, tweet risk, I guess, is the term to call it. And some sort of geopolitical event like Ukraine. So stay tuned. Thank you for listening. I greatly appreciate you watching. Please go to my store, the-studio-reykjavik.com, and get the great supplements that I offer. Follow my advice, stack them the way I tell you to, and you are going to benefit. You're going to be able to improve your immune system. You're going to improve your endocrine system. You're going to help with different systems of your body, including brain function. And you'll be prepared for what's coming in the fall and the winter. Get prepared. Thank you for listening and have a nice day.